warm welcome to Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are your headlines. The Dow plunges and tech tumbles as President Trump rails yet again against the Federal Reserve, calling Chair Powell a major loser for not cutting rates faster. The greenback faces a confidence crisis as tariff worries hit the dollar demand, sending the greenback to a 3-year low.
Chinese battery maker CATL ups the ante, unveiling upgraded cells it claims offer even faster EV charging than rival BYD, giving 520 kilometers of range in just 5 minutes. Tesla shares sink 6% ahead of earnings due today, with one analyst calling it a code red moment for the company.
Morning, how are you?
Good morning, very well, thank you.
Good. If Trump's policies were doing so much good for the US economy, yeah? If it was going so well, here's a question for all of you, and for her. Why would we need rate cuts? Why would we need a more aggressive Federal Reserve if everything was going super duper, that the economy was going from strength to strength on growth? The IIF hadn't just put out a piece in the last 24 hours saying actually now we think the US could go in some form of recession in the latter half of this year. If things were going so well from the tariffs and we were chucking in so much money into the United States and there was a couple of $1 billion a day coming in plus, why would we need rate cuts? Just asking for a friend.
The warning signs have already been flashing thanks to Liberation Day and then the pause. There's endless pause now on tariffs and whether anything is going to be negotiated. So I think the market, you've seen very aggressive moves to the downside. On top of it now, this layer around Jay Powell and again questioning whether his policy is correct. And, you know, as a journalist, we get to see some stories over and over again, not the same story, exactly the same story, with a little bit of a break in between. But we saw this first time round in the administration. The difference this time is that there's already been a rattled bond market for different factors around the fiscal spending we've seen in recent years, the tariff issue now, and of course now another layer on top around questioning Jay Powell's policy action here. So I've got to say it comes at a very difficult moment to have the same sort of pushback against the head of the Fed. So two different factors for markets. I think they've already been flashing warning signals. But what's going to get interesting this week away from just the index levels in the dollar will be the stock-specific news as we look at earnings reaction as well. So there's different layers to this market, I think, where there are concerns.
Yeah. I mean, Tesla, at the moment, it's sell first and ask questions later from the shareholders on Tesla, which fell once again. Okay, let's go through. Are we going to do the Trump social piece? I'd quite like to. Oh, it's in this, is it? Okay, right, lovely. Okay, the Chicago Fed President, Austin Goolsbee, told CNBC he's in favor of a wait-and-see approach from the Federal Reserve. There you go, especially with uncertainty around Trump's so-called reciprocal tariffs.
I think our uncertainties at this moment, and why, for me personally, when I hear Jeremy saying preemptive cuts, we're getting announced retaliation. We're talking about revisiting the tariffs in 90 days, and we don't know what the impact on the supply chain is going to be. So I think we want to be a little more the steady hand and trying to figure out the through line before we're jumping to action.
No, Goolsbee's got to be wrong. That can't be right. Announced retaliation, but hey, what does it say here? We don't know what the impact on the supply chain is going to be, so I think we want to be a little bit more of a steady hand trying to figure it through before we jump in. No. The president, Mr. Goolsbee, is telling you to jump in. He already knows the results of these. He must know better than you. You're a central bank of many years. Surely you should act now before you see the evidence of what happens with the tariffs.
Did you see Rosengren's comments?
No,
the former Boston Fed president.
What did
he was saying on a social media post on X, saying unless the goal is to make the U.S. trade like a third world economy, threatening the Federal Reserve independence only makes the U.S. less attractive to foreign investors. I mean, that is quite something, as we were talking about U.S. exceptionalism last year, to now be talking about whether we're trying to push the U.S. into a third world country, like trading partner.
I don't even know if we use the term third world anymore. I mean, it's emerging economy, developing. I don't think we're supposed to use third world anymore, but I take on board his points anyway. Yeah. But hang on a second. Oh, I get it. This is part of a cunning plan. Get the dollar down as aggressively as you can in order to make your goods cheaper for the rest of the world. Yeah, that's got to be it. Yeah,
Well, the dollar is down.
Yeah, exactly. That's got to be the clever plan. The only problem is you buy way more stuff with the rest of the world. Ergo, that stuff's more expensive. Ergo, potentially, I don't know. According to my economics textbook, it's more inflationary. But hey, you knock yourself out on getting the dollar down, US.
Look at the US markets. You know, every other day now we seem to be getting fairly large swings, and we had another 1,000 points nearly to the downside on the Dow yesterday in terms of what it meant. Heading now for its worst April outing since 1932. That's right. Not the Depression era comparison here is what we're talking about. Last time around was the level of the tariffs that we're talking about that were Depression era like. In terms of the performance, you can see right across the board the markets were down. Big moving names, United Health, Nvidia moving to the downside. For US technology names, it is the selling that is really around those Mag 7 stocks, and don't forget some of them will be reporting soon too. So concentration of focus there. Microsoft down heavily, Nvidia down 4.5%. So again, strip back there, and we're talking about homegrown competition from Huawei. That was another narrative that's damaged the fortunes of Nvidia. Apple sliding, Tesla. We were just talking the headlines about Chinese technology, not BYD this time, which challenged Tesla's dominance the other week on its battery technology. Now it's cattle as well from the Chinese market. In terms of what we're seeing from Treasuries, the early picture this morning, as we again question the strength of the bond market, we've got yields pushing higher. We just had some relief in recent weeks, but again, we're now moving north on the long end, 4.43 in the 10-year, but it's at 30-year as we again sit just 8 basis points shy of 5%. Our dollar has been a casualty. We've seen the rewind, we've seen the declines in the dollar. Very violent action is what we've witnessed in a very short space of time. Euro dollar, look at that level, 115.25 is where we've climbed to now in the morning session, up another tenth of a percent. As you can see, the sterling trade, pound 134. The dollar trade is weaker versus the Japanese yen, also sliding versus the Swissy. And to the Asian markets today, how they're tracking on the back of those Wall Street numbers yesterday, we're seeing much more contained. And this is, again, that story of diversification that keeps on happening where other markets are looking more attractive. Shanghai, Hong Kong perched a little firmer.
Yeah, I'm the only person left I know who still wants to go to the States this year.
Right. So you can
my wife
spend
said,
the great British pounds.
My wife said, you sure we still want to go? Of course I still want to go. I love America.
Well, I was meant to be there this week.
Oh yeah, we got something else going on,
Yeah,
haven't we?
we've
We've got another little thing we're
fry
up to,
here.
but we'll tell people about that next week, shall we? The US president met with CEOs of three of the America's largest retailers, Walmart, Target and Home Depot, to discuss the impact of tariffs on prices, which I presume, it's all great, according to the administration. Anyway, following the meetings, the three companies issued near identical statements. Okay. What do they really think then? Saying they welcome the opportunity to share their insights and look forward to further dialogue. What does that mean? Anyway, Matt Orton is Chief Market Strategist at Raymond James Investment Management, joins us now. Matt, I've had my rant. I'm so sorry. I've bored the viewers again. Tell me I'm wrong. Tell me this is all part of a cunning plan.
Hey, good morning, Steve. Well, I wish I could say it's part of a cunning plan. It's really hard to discern. And that's what you're seeing play out real time in the markets. Investors don't know what's happening. And it's really this uncertainty, this pervasive uncertainty where we don't know what's happening on the macro level that's really starting to feed through with respect to corporate guidance. You're starting to worry about what that might do to consumers. And so there is a very negative effect. It's almost death by 1,000 cuts. We've been talking about tariffs for a long time. We finally got tariffs, which were worse than we expected. And now we're living through those effects. And so when I try to bring it all home to clients, because this is a very, very charged environment here and around the rest of the world. And what I really try and do is segregate how we feel about the policy, whatever side you might end up on, and really think through how do you build a portfolio looking out 12 months down the road that can be well diversified to help weather the storm, because it's too late to sell. I don't think investors should sell. But there are places you can hide out. There are ways you can diversify, whether that's through gold miners, looking at other emerging markets like India, leaning into secular growth trends in the market like cybersecurity, defense. There are places that you can go where there's less of a question mark with respect to earnings and less of a negative impact from the macro uncertainty that we're dealing with right now.
Matt, for all of our US audience who want to own US stocks, or our international audience who want to own stocks, we were told, it was skewed to the big tech names. Well, when I look at the Russell 2K down 25% from its record high, I look at the Dow Transports down nearly 28% from their record highs. I've got to be honest, I don't see any broad brush places to hide in US equities. And the bond market, from what Karen was just saying as well, with that 440 yield on the on the 10-year. I don't see anywhere to hide there particularly as well. Where else, if you want to own a broad brush portfolio, do you look?
Yeah, so I think broad brush doesn't mean owning the index itself. It really means being focused on the idiosyncratic risk that you're taking in your portfolio and leaning into those secular growth trends like I talked about. And so when we came into this year, I told clients diversification is going to come back. I didn't think it was going to come back or be as important as we've seen play out so far this year. But diversification means across geographies. It means across asset classes. And it means within sectors and industries. And so balancing out of U.S., looking across the rest of the world, European defense companies have been a great trade. I think buying that on weakness makes a lot of sense because there's durability to it. Looking at emerging markets, like I mentioned before, like in India, for example, where 2% or less of its GDP is tied up with respect to tariffs. And oh, by the way, the market just came out of a 15% valuation correction and earnings are starting to pick up again. That certainly seems fairly attractive where asset flows can start to pick up again. And then even when you look in the U.S., I would argue we've seen peak concentration. I don't think, especially given everything that's happening right now, we're ever going to get back to the levels of concentration, at least not in the short to medium term, for what we've seen before. But that doesn't mean that underneath the surface that there are very strong corporate stories that are working in this specific market. You look at gold miners, like I mentioned, those have been great areas to buy on weakness for the market. You look in healthcare, you might not want to own a United Health, but you look at what's happening with respect to Lilly. You look at what's happening with respect to some of the pharmaceutical distributors that actually benefit from inflation or tariffs that might be placed on some of the generic drugs that get imported to the U.S. Those are areas that you can hide. And dividend growers. Dividend growth has actually significantly outperformed the broader market. So that's what I mean by diversification within the overall market.
Matt, in the meantime, we're going to have to get through some earnings this week, and some of those will be Mag 7 stocks for the likes of Tesla, Alphabet. Some will be defense names. What do you think we're likely to see? Because we know there's been distortion of a pull-forward effect around the tariffs for some industries, some companies. But what do you think, by and large, we're going to see in terms of some of these big-name stocks?
Yeah, Karen, that's a great question. A lot of the earnings are getting overshadowed by all of the macro noise. But what I think is most important with a lot of these big mega cap tech names that are reporting, it's going to be guidance. And within the guidance, I think you want to really pay attention to what are they doing with respect to the AI investments? Are they continuing to make those or are they pulling back? I think that can be telling about their perception of demand across the overall economy. And I think in addition to that, like an Alphabet that reports later this week, being really tuned into what's happening with respect to their ad spending. There's issues with respect to some of the Chinese companies with cheap goods coming into the U.S. that are pulling back. Are people still spending on YouTube advertising? That's going to give us a really good signal with respect to just where the broader economy might stand, at least in the short term, or how much damage uncertainty is going to cause to what had been really, really strong growth stories. Longer term, I think there are good buying opportunities, but I don't want to be wading into any of these names in the near term right now.
Matt, some of these stocks are interest rate sensitive, and typically when borrowing costs went down, these stocks went up, and we just have heard from the likes of the president saying, look, rates should be lower from here. The market's priced in 100 basis points so far this year, but now the question is lingering around the independence of the Fed as Trump pushes back against the central bank. Where do you think interest rates are going from here? Are we going lower because we're heading towards a recession?
Yeah, I think the curve's going to continue to steepen, Karen. I think the market's going to continue to speculate what's going to happen on the front end of the curve. And I do think it's likely we're going to see Fed cuts. I think the market's a little bit offsides, though, and there's going to be some adjustment that needs to happen because I can't see, recession's not my base case. I don't see the Fed cutting more than 2 times because I just don't think they need to, based on what we know now and based on the assumption we start to get some sort of negotiation with respect to tariffs. But the back end of the curve is pricing in inflation expectations. That is very, very real. And again, when you go back to earnings season, looking to what companies are able to pass on to the consumer, looking at what's happening with respect to their input prices that they're going to guide us to, that's going to be really important to see how much further perhaps the back end of the curve can go, playing out that inflationary story in the overall economic narrative.
I've had brushes with Jay Powell over the years. I remember at one conference he just completely ignored all my questions and carried on walking past. But I respect the man intensely. I respect his independence. I respect the independence of the Federal Reserve. Is he still the right man for the job, or actually is the president right? He's too late and should be gone.
No, he is not too late. Powell has done a commendable job, even through some of the issues we had with respect to transitory and perhaps, or not perhaps, definitely being late to that. But he has been very, very measured, and the Fed has been incredibly consistent with respect to the guidance they have given us and how they're going to act. That is really important to carry forward. And for all of the bluster that Trump is giving, the fact that you haven't heard Bessent kind of corroborate what Trump is saying. Up until the weekend, you never really heard Hassett say anything about it. And still, it's been kind of in passing. Congress has come out in support of the independence of the Fed as well. Republican senators have been speaking up too. So I think a lot of this is bluster. And honestly, if I'm Trump, at the end of the day, the Fed kind of gives you cover to some of your policies. You can blame the Fed for your issues. They didn't lower rates, fine. Blame it on the Fed for what happens to the economy. So he's taking away, I guess, a chip if this tariff policy doesn't play out the way he wants it to, which it's not really doing right now. So I don't really get it, but I don't think that bedrock of the economy is going to change. And if it does, he's going to pay the price for what he's trying to achieve with looser financial conditions. And I think a lot of the inner circle of his cabinet are showing him that right now.
Very good, Matt. Lovely to speak to you. I don't know what time it is where you are, but I'm sure it's stunningly early. Or stunningly late if you're a party animal. Thanks very much indeed for joining us. Matt Orton, Chief Market Strategist at Raymond James Investment Management. Something tells me that Matt isn't a party animal, that he's too studious for that. And for more on what a depreciating greenback means for economies around the world and why emerging market central banks may be forced to intervene, head online. There's a great piece there. In fact, there's many great pieces at cnbc.com.
Coming up on the show, Italy and the US build up trade momentum with Prime Minister Giorgia Meloni visiting Washington, while US Vice President J.D. Vance heads to Rome. Plus, L'Oreal reports a better than expected first quarter sales growth, but the CEO flags challenging conditions in the US. We'll bring you more this hour. And we'll discuss the impact of US tariffs on Canada, as well as the country's opportunities for closer ties with Europe, with the Canadian Economy Minister, Christine Fréchette. Don't miss that first on CNBC interview, 8:30 BST.
Yeah, plus on an exciting programming note, CNBC Europe is getting a makeover. That's CNBC Europe, not me, by the way, with a brand new studio, unfortunately, and a new programming grid, which means starting Monday you can catch Sylvia Morrow leading our European coverage. 6 AM BST, Europe Early Edition. I've seen a sneak preview. It's a great show. And Squawk Box with myself and Karen. We're getting a third anchor, Juliana Tattlebaum. That's from 7 BST.
One thing I've learned over the years is don't yell at the stock market. Why do we follow the markets? It's to make money and because it gives us a lens on how the world works. Ambition is the ability to see yourself in the future and to take steps right now in the present to become that future person. CNBC viewers are very ambitious. At CNBC, we are in the dreams business. You're watching to learn something.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, injuries and worries and things that went on throughout my career, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Tributes have poured in for Pope Francis, who died on Monday at the age of 88 after a stroke led to irreversible heart failure. The pontiff's body is likely to be moved to St. Peter's Basilica tomorrow for mourners to pay their respects. NBC News' Molly Hunter was at the Vatican yesterday and filed this report.
As soon as the news of Pope Francis's death was announced, cardinals from around the world have started making their way here to Vatican City. Now, tomorrow will be the first meeting of cardinals. Not all the cardinals will have made their way to town by then, but the first meeting of the cardinals who are in town. And the papal funeral is expected to be held within 4 to 6 days, and on the agenda in the next couple of days will be the exact date of that funeral. You can bet that will be on the agenda in the meeting tomorrow. Now, as far as the funeral details, Pope Francis during his life designed a lot of them. This is not going to be a huge state splashy funeral. This will be a pared back funeral, a simpler funeral, a streamlined funeral for a pastor, something more humble than what we've seen in the past. And he's made some of the changes. For example, tonight Francis's body was placed in a single coffin made of wood and zinc, not the traditional trio of coffins of his predecessor. Now, he could be moved actually as early as Wednesday to lie and stay in St. Peter's Basilica. And another change, he will not be buried in the Vatican grottos. Instead, he's chosen a different basilica in Rome, Santa Maria Maggiore, a basilica in the center of Rome. It was very close to his heart. He visited often. And then the attention turns to electing a new pope, the secret, mysterious process known as a conclave. It will happen in 15 to 20 days from today, from the pope's death. And as the cardinals come into town, more and more general congregations will happen. There will be formal meetings and informal conversations as well. And then, of course, they're sealed inside the Sistine Chapel. Voting will begin. Black smoke, as we know, once the ballots are burned, means no pope. And white smoke means a new pope has been chosen.
U.S. Vice President J.D. Vance was in Rome over the weekend, meeting with Italian Prime Minister Giorgia Meloni after her visit to Washington, D.C., followed by Pope Francis on Sunday. The Vice President has since arrived in India, where he met Prime Minister Narendra Modi, with the two hailing progress on potential trade deals. Now, U.S. President Donald Trump has hosted Italian Prime Minister Meloni in the Oval Office on Thursday, with Trump saying he is in no rush to end his tariff policies. He also accepted Meloni's invitation to visit Rome, while the White House said they could meet other European leaders as part of such a trip. Meloni vowed to keep working with the U.S.
Even if we have some problems, between the two shores of the Atlantic, it is the time that we try to sit down and find solutions. So I want to thank President Trump for having accepted an invitation to pay an official visit to Rome in the near future, and consider the possibility in that occasion to meet also with Europe. The goal for me is to make the West great again. Okay, and I think we can do it together.
We can.
We will keep on work on that.
Well, Sylvia joins us with more. Sylvia, let's just pull some of these threads together, because I think what the market is looking for is any progress on a trade deal anywhere that would give them some clarity about further deals being forthcoming.
And that's why I would split this trip into two dynamics: the appearances and the detail, the substance. When it comes to the appearances, it was a successful meeting for Prime Minister Giorgia Meloni, a lot of warm words from the President Donald Trump, and he also went as far as saying that there will be a trade deal 100% with the EU. They want to make one very much. But then this brings me to my other side of this equation, which is the lack of substance in this meeting. We don't know where the United States actually stands when it comes to trade conversations with the EU. What do they want to achieve? But nonetheless, we are witnessing all of this diplomatic effort, whether that's the Italians, the broader EU, or the UK, everyone trying to have conversations with the White House at this stage to figure out how they can overcome the impasses around tariffs. Let's see how these conversations will unfold. But for the markets, for our viewers out there, the question is that we still don't have detail in terms of how the EU and the US might overcome these differences, if they will at all.
Giorgia Meloni is one of the top 3 or 4 politicians in Europe, no doubt about it. But she doesn't speak for the Commission. And sometimes Italy historically has been an outlier to the Commission, sometimes it's been right at the centre. At the moment, we're not quite sure where Meloni is. Let's be honest about it, we thought she was going to be an outlier, but actually she's kind of gone along with a lot of Brussels policy. Now we're not so sure as well. What she can do is obviously offer the trips to Trump, flatter Trump as well. We know he likes flattery as well, like the King Charles visit here in the UK, all worked very nicely, we think, as well. But she can't change EU policy regarding a whole host of issues single-handedly as well. Is this just, yes, it looks very nice on the surface, but at the end of the day, the trade war between Europe and the US will actually happen?
It's a very good point you're raising, but the difference this time around is that she actually coordinated what she was going to say in Washington with the President of the European Commission. There were phone calls, and I got confirmation from a spokesperson for the European Commission. There were phone calls between Ursula von der Leyen and Giorgia Meloni
Unlike
ahead
when
of the
Orban
trip.
goes off on one of his trips to Moscow.
For instance, and of course that is helpful. So she coordinated her response going into Washington, D.C., which is helpful. Of course, she has the Italian interests in mind, but when it comes to trade, she's very much aware that trade policy is an EU matter. It's for the European Commission to actually negotiate. So of course, it was very clever to go to D.C. to some extent, with a bit of a mandate to some extent from the European institutions in terms of what they want to achieve and what it would be helpful really in the trade negotiations with the US.
So one of the points that we've been looking at is whether the administration will go through every single line item with every single country. Part of me wonders whether they'll just go for the headline act. And to my point, that one thing we know about India, well, one thing I know about India, is that the Americans have been really challenged over the years to get their retailers into the Indian market because the borders have been so high. And it seems as though one of the big points of negotiation will be allowing the likes of Amazon and other big American retailers to get access to that Indian market. So we cast it over to Europe. And I wonder whether it's the same thing here, whether some of the headline items might be the points of negotiation mainly, and other things may fall by the wayside in the bid trying to get things done, given there's so many nations.
It is a possibility, but here we are once again, we just don't have that clarity. We don't know exactly what is actually being featured in these conversations between the US and the EU. We know that the Europeans are preparing for the eventuality to tariff digital services, to look at that aspect of the conversations as a way to retaliate further down the line. Do they want to do it? No. But are they getting ready to potentially doing it? Yes. The other point I would actually raise from the conversations in D.C. between Italy and obviously Donald Trump is actually the comment from Giorgia Meloni in terms of energy, suggesting indeed that we are willing to look at that as a way to find a compromise with the Americans.
That could be low-hanging fruit. Sylvia, thank you very much. Ahead on the show, Bitcoin prices are steady as President Trump criticizes Fed Chair Jerome Powell. But what comes next for cryptocurrency? We'll discuss after the break.
Live ambitiously.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fought for them.
I believe in getting justice.
American Greed on CNBC.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
The day's top stories driving Wall Street. Brian Sullivan joins Kelly Evans. Power Lunch, CNBC.
A warm welcome to Squawk Box. I'm Steve Sedgwick with the Karen Cho, and these are your headlines. The Dow plunges and tech tumbles as President Trump rails against the Federal Reserve yet again, calling Chair Powell a major loser for not cutting rates faster. The greenback faces a confidence crisis, tariff worries hitting dollar demand, sending the greenback to a 3-year low. Chinese battery maker CATL upping the ante, unveiling upgraded cells it claims offer faster EV charging than rival BYD, giving 520 kilometers of range in just 5 minutes. And Tesla shares sink 6% ahead of earnings due today, with one analyst calling it a code red moment for the company.
A bleak Easter Monday for U.S. markets, a reversal again taking force. What we saw, almost 1,000 points stripped off the likes of the Dow. You could see the pullback well over 2%. United Health, one of the weaker performers on the Dow. In terms of that performance on Monday, it is now seeing the April performance being somewhat of a dire one, almost the worst performance since 1932. But elsewhere, it was tech stocks under pressure as well, and some of those consumer discretionary names, all major boards there in the red as we again get set up for more earnings this week. Let's take a look at the Asian markets, picking up on that reading from Wall Street, and it's been a bit of a mixed bag. Japanese and South Korean stocks are seeing some faint selling there, just tilting into the red versus green. Moving on to Hong Kong and Chinese names, the Shanghai Composite trades higher. To the European futures as we get set up for this market to reopen after a long weekend, and we are chasing some weaker ranges. Don't forget, as we wrapped up the trading week last week before Easter, it was a much firmer market as we saw really recapturing of territory and a catch-up trade to the US markets where they'd gone in opposite directions over the past trading week or so. So we are looking to give back a little bit of that territory first out of the gates this morning. But what's in store for US markets? Let's take stock after those falls yesterday. We are setting up for a little bit of a move into the green, so more positivity expected to return to the markets today, and you can see the Dow perched up about 100 odd points. I want to push on to Bitcoin because we've been talking about the weakness that we're seeing in the US dollar. Now, Bitcoin prices were muted after US President Donald Trump unleashed a fresh attack on Fed Chair Jerome Powell, but the world's largest cryptocurrency is well short of its January peak of $110,000 after tariffs sparked fears of a US recession. Professor Carol Alexander joins us, Professor of Finance at University of Sussex. Carol, great to have you back with us. We've seen in recent weeks that the stock market rout has also taken with it the cryptocurrency trade. However, just in the past number of sessions, it looks as though Bitcoin at least has found some form of a foothold. Do you agree? Is this because you've got a market now positioning around some sort of a diversification trade away from the US dollar?
No, I think Bitcoin is increasingly linked to assets like gold. Some people have referred to it as a sort of digital gold, although, its price in terms of 1 ounce of gold has fallen, well, nearly halved since December when it was 40 in terms of 1 ounce of gold, XAU, Now it's about 25. But that's just Bitcoin, I mean, there's a whole load of other crypto assets that are really in trouble. Bitcoin is exceptional, really.
We saw a big flush out, though, of positions in Bitcoin in recent weeks with the real risk-off moves. Where do you think that leaves positioning around Bitcoin?
Well, it's mainly going to be driven by institutional interest. Derivatives, CME are doing very well with their futures and options, and they're really aimed at institutions. And, of course, the ETFs. very large number of Bitcoin ETFs that have been doing reasonably well. And Ether ETFs have really suffered, though.
Carol, are the retail investors, I'm sure I've asked you this many times, lovely to see you by the way, are the retail investors actually getting involved in this one, or is it just the professionals mucking around amongst themselves still, or those big speculators, the sailors of this world?
I think they are. As I said, it's like a digital equivalent to gold, and that's a form of diversification. But the crypto winters, they last longer than the bear markets in US equities. So I do think Bitcoin in particular is going to rally because of this institutional interest, but likely later this year rather than, I think US equities hopefully will come back sooner.
But what about the other coins then? I mean, again, we have talked about this before. I know we have. There are thousands of them. Last time I looked, there were about 13,000. Everything from a Trump meme coin to all kinds of other things as well. There was the original Dogecoin. We used to talk about that one as well. What's going to happen to all of those? I mean, you mentioned they've suffered. Are they just going to start disappearing?
Well, meme coins maybe. You know, there are these fads, and meme coins was like passé now. It's 2024. I think people have realized what they are, and, you know, they get hyped up, and then ordinary investors get in, and then there's what we call a rug pull, and then the price plummets, and yeah, you know, that's how it works. Even Trump did that as well.
Carol.
But the rest of the... Sorry, go on.
I was going to ask you about what comes next from the administration, because there were big, broad hopes, not only for the stock market, that Trump would be good for some of these risk-on assets, but also for the crypto space. And it feels as though a lot of the promises have not been forthcoming, and we now have a president that is largely distracted by tariffs. Do you think there's any upside coming for crypto?
Not really. I mean, everybody hoped that he would put something real into this crypto reserve, but all he did was put the 18 billion that he had forfeited in terms of fines and scams that are recovered, which was mainly Bitcoin, but a bit of others. But he didn't put any additional things into this reserve. And he just seems to be intent on making money himself. I mean, this World Liberty Financial, where he's trying to mimic the major shadow bank in decentralized finance, that's Aave, is clearly just to make money for his sons.
Carol, they're still nicking it when it goes hot, apparently. Well, I think that makes sense to a lot of people, i.e. cold wallet, hot wallet. When it's hot, it becomes more stealable as well. Are we still talking about a product that the criminals absolutely love and the authorities haven't got a clue how to stop it?
Yeah, I mean, South Korean in particular, you know, the hack of Bybit exchange, the biggest in history, it was 1.6 billion, I think, from the hot wallet there. They're very clever, the South Koreans.
Yeah, but as you say, on February 21st, there was a 1.46 billion crypto assets stolen from Bybit, which is Dubai-based exchange, which is what we're both referring to as well. So every time your product, your asset can hit the World Wide Web, to use an old phrase, it can be stolen quite easily. Is that what we're saying, or am I being unduly unsophisticated as ever?
Well, I mean, MetaMask and other wallets are fairly secure, but I mean, the real problem with putting something on chain, like for example a tokenized version of Tesla stock, which is what the FTX exchange was about to do before they went bankrupt. As soon as you put something on the chain, then an exchange like Bybit can put something called a perpetual futures on it and allow up to 125 times leverage. And then it becomes extremely volatile because professional investors will start trading the volatility as they normally do with huge amounts of leverage. So that's the real danger of putting something on chain. As soon as it's on the chain, you can put this excessively leveraged product on it.
Carol, can I talk about where to from here and whether 100K is going to be a possibility at any point? Because some are saying the base that we've now seen on Bitcoin could be a support level for it to form and push higher from here. Is it possible we get back to 100K, or is that really going to require risk on assets to also find some appetite?
Yes, I think risk on assets need to find that appetite, but I think they will. You know, there's a lot of assets out there that are looking for yield, and Bitcoin can give that, despite its excessive volatility, which is driven exactly by these professional investors on places like Bybit, as I just explained. Yeah, I mean, I managed to forecast the price pretty well the last few years, and I did forecast a possibility that it would go up to 200K this year. I didn't expect the Trump tariffs. I mean, that's really put it down. But I think I would say the support level was lower than 80K, and it's about 88K at the moment.
Wow. Carol, we'll leave it there, but you kind of had me at 125 times leverage. I've got to be honest. I can't believe that people are dumb enough to pick the most volatile asset out there and then leverage up 125 times. I never think people deserve to lose money, but I think in this case I'm going to say they do. Carol, thanks for joining us. Carol Alexander, Professor of Finance at the University of Sussex, joining us from the magnificent place that is Hove. You been to Hove recently?
Not recently.
I know you like a look on Rightmove.
Well, I'm just keeping in touch with all house prices across the country.
Yeah, when I moved down to the countryside a few years ago, I stopped going on Rightmove, which is just for those international viewers, it's an online property portal. But you're
others are
still
available.
Oh yeah, Zoopla, but you love it, don't you?
I like seeing what prices are across the entire country. And every time you look over my shoulder, you see me looking at a new region, which is why I know what house prices are doing.
Hang on. No, you're not. No, it's on Bitcoin.
No, exactly.
The US Department of Justice.
Yes, let's take a look at what the DOJ is up to and Google. They're back in court this week as the antitrust trial over the tech giant's search engine continues. The DOJ is seeking an order that would require Google to sell its Chrome browser. Eamon Jarvis filed this report.
Attorneys for Google argued in court Monday that the U.S. government's quest to break up the company is too aggressive and would unfairly benefit its competitors. But Assistant Attorney General Gail Slater pushed back on Google's argument that the Department of Justice's proposed fixes are dangerous and irresponsible.
You know what is dangerous? The threat Google presents to our freedom of speech, our freedom of thought, to free American digital markets. You know what is irresponsible? Leaving Google's monopoly abuse unaddressed.
The Department of Justice also argued in court that Google wants to pretend the judge's ruling that it's a monopoly never happened and suggested the company's arguments that breaking it up threatened privacy and security just don't make any sense. The proceedings are being held before Judge Amit Mehta of the U.S. District Court for the District of Columbia, and they're expected to run for several weeks here, but a decision from the judge is not expected until late summer. For CNBC Business News, I'm Eamon Javers in Washington.
Coming up on the show, Tesla shares tumble ahead of its first quarter earnings today. We'll take you through that and bring you up to speed next.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they all fell for them.
I believe in getting justice.
American Greed on CNBC.
It's not only the relationship that Musk has with Trump that's a problem. It's the fact that a lot of rivals who were nowhere near Tesla a couple of years ago are aggressively coming up the rails. How about this next story, for instance? Chinese car battery manufacturer CATL, right, says it could offer faster EV charging than its rival BYD, and as well as Tesla, that goes without saying. But BYD quite recently came up with something amazing. Now CATL is saying, yeah, we think we can better that. The company's unveiled a new flagship battery cell which claims, again, it's a claim at the moment, to offer a 520 kilometre range, 520k from just 5 minutes of charging, and said it wants its battery to become the standard for electric vehicles worldwide. Now, at the same time, shares of Tesla fell 6% Monday ahead of its closely watched first quarter earnings report due today. Investors are expecting the EV maker to report just under $21 billion in revenue. That is a significant drop compared to the previous 3 months. It comes after Tesla reported a 13% year-on-year decline in first quarter delivery numbers, its worst quarter since the beginning of August 2022. Analysts are increasingly worried about Elon Musk, quite frankly, and his involvement in the US government. In his latest note, it's a great note from Wedbush Securities' Dan Ives, who Karen and I spoke to in the last week. He urged Musk to take a step back from the so-called Department of Government efficiency or risk serious brand damage. Well, the brand damage is there. It's just a question of how long this is going to last. So, look, yeah, have a look at this, actually. Why don't I read this? Because I think it's interesting. Musk needs to lead the government to take a major step back on Doge and get back to being the CEO of Tesla full-time. Anyone that thinks that the brand damage Musk has inflicted is not a real thing, then maybe you should spend some time speaking to car buyers in the US, Europe and Asia. But the problem is, and Karen, I've got the note here, and I've got a lot of respect for Dan Ives, and it's a great note as well. The problem isn't just about Musk, his relationship with the government, the brand damage, the disdain from buyers as well. It's the fact that this was the only game in town a couple of years ago. If you wanted a serious EV, it was the only game in town. Forget about the Europeans, forget about other Asian manufacturers, and certainly forget about the Chinese. Now it's stunningly crowded. The only way that they can pop their head above the parapet now and make themselves look different from everyone else is if they've got something else going on at Tesla, whether it's batteries, whether it's robotics, whether it's self-drive combined with robotics, whether it's AI as well. Something, they need something, because on pure car sales alone, forget about, oh God, my earpiece, forget about the Trump stuff as well. If they can't put themselves above on navigation, self-drive or robotics, whatever is going on, then they're just another car company, but they're a struggling car company compared to some of the rivals with that association with the Trump administration.
From Dan Ives' report, it feels as though they just want some signaling function this week, some sort of optics here that Musk will be laser focused on Tesla. I think that is a starting point that people want to hear from this earnings outing this week. So I've reset is what they're looking for. But, there's no doubt that the politics that Elon Musk has been pushing in Europe around far-right parties has been incredibly damaging for the brand. And, of course, Doge and the efficiency efforts has been very damaging for the brand at home in the United States. So will we see him step back from Doge first up, but also from some of that angling around far-right parties in Europe? The other point to your point that you made around the competition, C-Line 7 is coming. BYD's option in the same category as the Model Y. That is where the challenge has now been thrown to Tesla. And previously, this is a market here in Europe where you would say that there was really a lot of interest in buying Teslas. But in future, if you've got competition, you've got people that are really annoyed around the politics that have been peddled by Musk, will they revert to a cheaper option that is meant to be more of a traditional car experience, not this real futuristic model that Elon Musk has put on the roads? So will you see the buyer switch to that offering in Europe?
I think Dan Ives, if he thinks, and again, the man's great, but if he thinks that Elon Musk can just concentrate on one thing, I think that's a stretch. What did Elon Musk do 1,494 times, according to RTE.ie, Irish site, in one 15-day period from January the 21st to February the 4th? What did Musk do 1,494 times? Keep it clean. He tweeted. He posted, well, X'd or whatever you call it. He posted 1,494 times in a 15-day period.
Yeah. He works at super speed. But
I've always said,
strategy
so what? So
now.
what about Tim Cook? What about Jeff Bezos? What about Mark Zuckerberg? These guys are pretty smart cookies. Yeah, they have one job each. I'm sorry, they have one job each. They're multi-billionaires. They've got one job each. Carlos Slim, one job. You know, the Pinot bosses, one job. You know, I just don't know if you can do all these things really well, even if you're Elon Musk.
Everyone's different, but I would say too, when it comes to the trade tariffs and
John Pierpont Morgan, he had one job.
Right.
Carnegie had one job.
I get the point you're making. But there's a bigger one here too around the fortunes of Tesla in China. Don't forget there's a ton of trade issues. And this is the first buddy, as he's been termed, the first buddy to the president. So if China and the US don't get to some sort of agreement soon, where does it leave Tesla too with those relationships on the ground in China?
And are the cars better anymore? I think there's a lot of people who argue they're not.
Yeah.
Are the cars worse?
Well, the charging is not. I mean, it's a point now, isn't it? You've got BYD and you've got CATL that are much faster charging.
Shanghai hosts its annual auto show this week, with China's car manufacturers making a push to expand their reach globally. Lynn filed this report.
A lot of focus on what the foreign as well as domestic automakers will be releasing in terms of new and refreshed models, but we're also tracking the impact that the US-China trade war is having on the broader sector. And yesterday evening, I got to sit down exclusively with the CEO and founder of Hesai Technology, David Lee. Now, Hesai is in the LiDAR sensors space here, which has seen a rapid adoption. You've got most of the major EV names like BYD, Huawei, NIO, Li Auto that have adopted this kind of technology and really described as basically the eyes to help self-driving cars perceive their surroundings. Now, David expressed to me in terms of the tariff situation some of the frustrations that both the company as well as his US clients are dealing with, keeping in mind that some of his disclosed US clients include some of those robo-taxi companies like Zoox, like Aurora. They also supply to NVIDIA as well that use their LiDAR sensors as part of the chip testing process as well. Let's watch.
It's painful. Even though today we have less than 10% of the revenue this year coming from the US, but that's 10% of the revenue, and it's a lot of very valued customers we have with a lot of contracts extending into the next few years, right? So you can imagine, we both read this from the news, right? And then the discussion is like, how do we deal with it? Then if you boil down to the decisions we make on both ends, you realize that tariff is supposed to balance the trade, assuming that your domestic player has some slight disadvantage in price, probably only price, right? In our case, we are in the position that there isn't exactly a replacement for us.
Given the concerns in terms of the US market, David Lee said that they are very much focused on Europe here and also looking at diversification when it comes to supply chains, saying that they see Southeast Asia as a potential place for a production hub in the next 2 years. And ahead of the auto show, which kicks off tomorrow here in Shanghai, we'll be speaking with plenty more top executives of EV companies as well as those in the autonomous driving space as well. For CNBC International, I'm Lin reporting from Shanghai.
L'Oreal Q1 like-for-like sales rose 3.5%, but the CEO flagged challenging conditions, particularly in the United States. Well, Charlotte joins us with more. Charlotte, we've seen even through recent numbers that beauty categories are all very different. Skin performance, again, different categories. So what are you seeing this time?
Yeah, well, looking at the details is really important there. But, you know, we're always looking at, is there the lipstick effect, the old famous lipstick effect when we see a slowdown the economy, people still indulge in smaller luxury like beauty. And that's why we're trying to take the temperature. And for the moment, it looks like it is resilient, but there are some question marks. And certainly, as you were saying in the introduction, the weakness in the US, I said in the US, it was more challenging than anticipated, while China was slightly better than expected. That's what the management said last week. And the US, that's one of the markets where they're expecting to see some growth this year to help them offset some of the weakness in the Chinese market. We saw some growth in the last quarter, but now it was down 3.8% this quarter. They said the company will have to raise some of their prices to offset tariffs going forward. They have built in some inventory, so they said they potentially see this impact more in the second half, and they're watching the developments on that front there. But a bit of a relief, though, because you remember when LVMH posted their numbers, they said they saw some weakness at Sephora, and this kind of a little bit reflected there, but there is some better news in North Asia, up 6.9%. Again, they say in China things are flattish compared to negative trend in the last quarter of last year. Europe, resilient, up 4.3%. But as you were saying, Karen, it's all about the Luxe division there that has been resilient, up 5.8%. We know the trend in perfume and high-end fragrances is helping them riding some of the slowdown that we've seen in some of the markets.
That's a great big alarm bell. I mean, that's been I disapprove of it because I know it's kids like mine who are going to Sephora and who don't even need makeup, unfortunately, but I have no power in my home. That's an alarm bell if one of the great growth drivers, which is Sephora, is slowing down.
Well, that's what LVMH said last week, and from what we heard from L'Oréal, they said that makeup, whether it was in mass or luxury, was a category that was most below expectations. So here again, no lipstick effect, but whether that is transferring to other areas, and here again, high-end fragrances is one that has been extremely successful recently for L'Oréal. They said this is still driving growth for them. Dermatological beauty, they have brands like Vichy or La Roche-Posay, that is still doing well, not the numbers that we've seen double-digit growth in previous quarters, but still up. And so all the divisions were positive. But as you say, there's big questions about here. We saw some resilience, a bit of relief, but it looks like the second half might be much, much tougher for them, especially given the trends in the US.
Is this where the aspirational luxury buyer has gone to, all the way down to the makeup category? Because what you can see is Luxe was a decent performer. We know there have been so many tie-ups. If you go to any makeup division at some of the department stores, you can see all the big brands with their own makeup these days. And I can see Jacquemus, there's a tie-up with L'Oreal and that company now too. So is this where the aspirational buyer is hiding out?
Well, yes and no. Here again, from what we heard from LVMH last week, that weakness in Sephora and beauty is that this is where the aspirational buyer is starting to be squeezed. But there is also the trend that a lot of aspirational buyers have been squeezed out of luxury, and beauty has become the bridge to some of these luxury brands. So L'Oréal is certainly benefiting from that, but especially perfumes. They said this is one of the bridges for, someone cannot buy a Chanel bag maybe, but they can buy a Chanel perfume. And so they have a lot of brands that have the perfume for Prada. Jacquemus, one of the latest brands that they took on board for L'Oréal.
Got to wrap you up. Got to pay the bills. Come back and join us a little bit later on. Coming up on the show, US markets taking a beating as President Trump once again bashes the Fed chair Jerome Powell and puts the Fed's independence into question. More on that when Scorebox returns with Charlotte a little bit later on.
The day's top stories driving Wall Street. Brian Sullivan joins Kelly Evans. Power Lunch, CNBC.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. There is the need for data centers. There is the need for more computation power. There is this need for AI. There is the need for connecting the world to bring businesses together. There is the need for consumers to have faster access. And for all of this, we are kind of firefighters trying to solve that problems, but we have a leaking hose here in Europe because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. Large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes, and on demand, the machine will actually mix it up and then deliver it to any go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumption.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by
Welcome to the second hour of Scorebox with Karen Cho, myself, Steve Sedgwick, and these are your headlines. European equity markets poised to return from the long Easter weekend with green on the screen, shrugging off another Wall Street sell-off. US equities plunge once again at the start of the week as President Trump rails against the Federal Reserve, calling Chair Powell a major loser for not cutting rates faster.
The greenback faces a confidence crisis as tariff worries hit the dollar demand, sending it to a three-year low. Tesla shares sink 6% ahead of earnings due today, with one analyst calling it a code red moment for the company.
So he's at it again. President Trump has clashed. Well, he hasn't actually clashed because Jerome Powell hasn't risen to the bait. So he's basically just had another pop at the Federal Reserve chair, calling him, quote, wait for it, a major loser, and urging him to cut rates immediately. In a Truth Social post, he accused Powell of refusing to act even as inflation pressures ease. It comes after Trump wrote last week that Powell's termination could not come fast enough, with the White House studying whether the Federal Reserve chair can legally be fired before his term ends in May next year. The greenback is under a lot of pressure, trading at multi-year lows on the dollar index, down 8% so far this year. I mean, what's there to say? There's a huge dissonance going on. Surely, do you know, actually, I haven't got a problem with Trump doing what Trump does, because that's what Trump does. I have a problem with the great and the good of America on Wall Street, the people who pay the bills for the Republican Party, the congressmen and women in Capitol Hill, the billionaires on Wall Street, not coming out more aggressive and saying, no, sir, this is wrong. This man is actually a pivotal part, a key part of the machine that keeps the American economy on track. A reason why there has been confidence in the reserve dollar. That's why from the early part of the 20th century, there has been confidence in the US dollar as the reserve currency of the world, because we have an independent Federal Reserve, which is doing a pretty good job by and large as well. Where are the great and the good of Wall Street and the Republican Party coming back to support Mr. Powell?
Trump's message of draining the swamp, unfortunately, is very negative for institutions. And the reality is that institutions do matter. There's been a whole heap of economic research that most people have never read, which effectively says that if you have strong institutions, you have much stronger long-term growth. But the reality here is that Trump has been taking a bat to every single institution, and one of the last ones he hasn't hit until the last 24 hours in this latest term has been the Fed. So taking a bat to Powell may be beneficial for him as he sees it in terms of shifting the blame if there is a downturn, finding some sort of a scapegoat. But the reality is if you undermine confidence in the Fed, then you undermine markets, you undermine the dollar. If you look at the extent of the declines in the dollar, the drop so far this year, it's wiped out all of last year's gains. And why that's interesting is that you saw a huge inflow of money into US assets last year around this US exceptionalism story. So it's quite something to be whipping away all of those funds in a short piece of time in terms of what we're seeing now on track for its steepest monthly decline since the global financial crisis, but also the 8th biggest drop since the era of free-floating exchanges was introduced more than 50 years ago. So pivotal moments is what we're seeing and what we're now comparing to in terms of the dollar decline.
Let's just go back another step at a different level. And I said this an hour ago, and I'll say it ad infinitum. If the Trump policies were working so well and America was great again and everything was working so superbly, why would we need more aggressive rate cuts? Trump inherited an economy, correct me if I'm wrong, that was growing over 2%. And now the IIF and others are talking about potential some form of recession this year. If the Trump policies were working so well, why would we need rate cuts?
And if you've got inflation, how on earth do you cut rates? Because then you undermine price stability for the longer term. We've all been through that era recently, haven't we, in terms of the COVID era and seeing what inflation looks like. I want to take you to the markets, and the action we saw for Easter Monday was negative. We saw traders returning after the weekend and pushing stocks lower, nearly 1,000 points coming off the Dow. In terms of the decline, we're now seeing potentially one of the worst Aprils since 1932 for the Dow, so right back to Depression era performance for the month of April. In terms of the S&P 500, again, marching back towards some of those lows as we see further declines. April had lower points for the S&P 500, but the question is whether we've now undermined the recent support that we've seen return to markets around the pause and the tariffs. NASDAQ too under pressure. We've got some Mag 7 stocks reporting this week. So again, focus will be on the S&P and the NASDAQ this week. To treasuries and tech, let's take a look at those big tech names. We've got Tesla and Alphabet reporting later on this week. So those names in focus, and you can see already there's been some selling in the likes of Tesla. It is down more than 5% overnight, selling to in NVIDIA. To treasuries, the stability we saw returning to the bond market in recent sessions now seems to have dissipated as we're again marching north on the 10-year, and we're sitting just off the 4.5% mark. 8 basis points shy at the long end, the very long end, the 30-year versus that 5% mark. So again, heat in that long-term curve there. To the Asian markets and what we're seeing, the Chinese markets have been stronger. We've seen some green there for the Shanghai Composite and Hong Kong stocks, but the Nikkei and the Kospi picking up on the red from Wall Street. European futures, as we reopen after a very long weekend for Easter, markets were firmer last week, but some of that expected to disappear at the start. We're up roughly about 4% on the Stoxx Europe 600 last week. So again, modestly downbeat to the action expected this morning. The Chicago Fed President Austin Goolsbee told CNBC he's in favor of a wait-and-see approach from the Federal Reserve, especially with uncertainty around Trump's so-called reciprocal tariffs.
I think our uncertainties at this moment, and why for me personally, when I hear Jeremy saying preemptive cuts, we're getting announced retaliation. We're talking about revisiting the tariffs in 90 days, and we don't know what the impact on the supply chain is going to be. So I think we want to be a little more the steady hand and trying to figure out the through line before we're jumping to action.
The U.S. president met with the CEOs of 3 of America's largest retailers, Walmart, Target, and Home Depot, to discuss the impact of tariffs on prices. Following the meetings, 3 companies issued near identical statements saying they welcome the opportunity to share their insights and look forward to future dialogue.
The fact that they couldn't come up with something more ingenious than a bland, an utterly bland statement that the 3 of them all pretty much agreed upon. Doesn't that speak volumes to you?
I want to agree with you, but then there is that report that is there going to be some sort of deal in India? Is the president trying to angle for some better performance in an emerging market?
How's the deal with India going to change the price of everything in Target and Walmart?
Well, at this point, if there is a retreat on some of the tariffs, some of these negotiating tariffs, and if they get a breakthrough in a very large market where they haven't had great access to, can they see some upside? I mean, was there almost a holding pattern for some of these companies? Or is it, as you say, just entirely negative and they're just to try to hold the look? And those are the options. Let's get to Mohit Kumar, who is the head of chief economist, and strategist for Europe at Jefferies. Mohit, thank you so much for joining us today. We're talking about what looks like a layer cake to me. We've had the layer of tariffs uncertainty, another layer around recession or stagflation, another layer on top around the attack on Jay Powell and the independence of the central bank. What do you make of these very negative layers that have been put together for markets?
I think short term, and something you were discussing, I think what Trump will try to do is get some easy wins. Trade with India, potentially UK, Japan. Yes, those easy wins will happen. But the really main issue is China and Europe. And I think that will be much trickier from a trade perspective. So the trade tariffs saga will continue, and EU and China is the main, let's say, block that I see from the tariff perspective. Recession, I'm more in the slowdown camp. I don't think we get a recession because the hard data is still holding up fine. And to me, the biggest marker is really the unemployment rate. Unemployment rate, yes, we can peak at 4.5, 4.6. I don't think we go to 6 or 7%, which is where we had past recessions. The last one is, of course, the attack on Fed. And again, this is a battle Trump cannot win. I do not think he can remove Powell. The damage that it will do to the credibility of Fed, I think, is a big negative. But to me, we have seen in the past that bond market is really the pressure point for Trump. And we saw when yields were going above 4.5%, Trump backed down. If you are going to attack Fed's independence, bond market will take it negatively, and Trump will need to back down. So,
this was something that was in a report last year when we saw the fragility in the bond market. It was seen as the straw on the camel's back if there was any sort of questioning of independence of the Fed. And right now, if you look at the bond market, you've got to say there are warning signals again as to how investors feel about U.S. treasuries. So just how aggressively can Trump push here without undermining confidence, without undermining long-term growth, if he strips away the independence of the Fed?
I think it's more talk rather than action. I don't think Trump will actually do much in terms of removing Powell. Anyway, he's got a year and a bit.
But the talk's negative too, isn't it?
The talk's very negative, and it undermines the credibility. And the background is negative as well, because it's not just investors are talking about the Fed. The credibility of US as a trading partner is under threat here. And a lot of investors are asking, even US investors are asking, what are the alternative places to invest? It could be Europe, it could be Asia. So the background is negative, and on top of it, you are undermining Fed's credibility. So to me, that's something that Trump is a battle he cannot win.
What's the bull case for the dollar?
Not much. The only bull case for the dollar is the fear is very negative, in the sense that we track positioning across markets very rigorously. And if you look at positioning, market is very underweight dollar right now. So the bull case is we get some hints of deal, and because positioning is very crowded, we could see a snapback. But that's a short term. Short term bull case I can make purely on the basis of positioning. Long term, I think the era of stronger dollar is done.
Do you know, I think it's something else, regardless of whether the midterms change the mathematics on Capitol Hill, regardless of who's the next president in 3 years and 260 odd days. The truth of the matter is, we've seen now in the full violence of the US electoral cycle for a couple of years now as well. Do you think people are looking for longer term investments? And most investments are longer term than the 4 years that the president's in place. Actually, just saying, do you know what? The US is just not worth the hassle of the stress of whether it's going to be another Trump or Jr. or Vance or a swing back to the left or what have you, or it's AOC or what have you. Do you think there's a longer term problem with owning assets in the United States because of the violence of the, and I mean violence as in the electoral swings rather than actually physical violence?
I fully agree with you. But the only pushback I would have is, what's the alternative? So if I'm an investor, I'm an institutional investor sitting in Asia and I'm worried about the dollar, what's my alternative? Euro, not obvious, because you get these far-right parties in Europe, so it's not obvious that I want to shift all my reserves to euro. GBP, again, not obvious. Chinese yuan is not there. So it's about the alternatives.
I'm not sure I buy that about the far-right. I know there's far-right parties in Europe as well, but they haven't made that striking breakthrough yet, which has changed policy in any major country in Europe, or indeed at the Commission.
I fully agree, but your point is yet. I think that's the key word. And we're talking of investors who look at 5-year, 10-year horizon. So 5-year, 10-year horizon, yes, you can talk about shifting a portion of your reserves to euro, but it's not that you will dramatically shift your allocation towards euro.
Let me just go back to the 101 as well. Let's say Donald Trump is stunningly successful and people buy more American goods but actually are selling less to the United States. They'll be receiving less dollars, yeah? So they'll be recycling less dollars. I mean, we're going back to 101 here as well. Again, if Donald Trump is successful, isn't that a bear case for owning US assets?
I fully agree. And this is the point I've been making, that fiscal and current account are two sides of the same coin.
So if he's successful, it's a bear case for the US.
Yeah.
And if he's unsuccessful, it's a bear case for the US.
So to me, the era of stronger dollar is gone. That part, but it's a long term. It's a slow process. And to me, one of the assets is, I'm not just looking at euro or GBP or yuan, I'm also looking at the alternative, which to me is gold. So having long gold as a core position in portfolio makes a lot of sense to me.
Yeah, you're not the only bull in the room at the moment around bullion. I want to take you to euro and what we're seeing here in Europe, because ECB's Christine Lagarde last week was talking about a negative demand shock. That's what they're talking about. And it felt as though things were in the balance as to whether they were more worried about demand or whether they were still worried about the inflation side, because tariffs could work in different ways. What do you think we're looking at in terms of those interest rate cuts? Because earlier in the year it was like 1.75 was the lower bar for terminal. It feels like we've slipped even further, maybe 1.5%. What's your view?
But when I think about the tariff impact, US is the net consumer. So when we think about inflation and growth, US is short-term inflationary and negative growth. But for trading partners, it's mostly about growth. It's actually not about inflation, because we are exporting, we're not consuming. So that's why ECB is very right to be worried more about the demand shock rather than about the inflation shock. And to me, what was interesting in Lagarde's comment was she opened the door to take rates below neutral. Because she said neutral is a concept in a shock-free world. And now we are not in a shock-free world.
And neutral is what, 1.75, right?
So Lagarde said it's 175 to 225. That's her range of neutral, which I agree with. Which means that rates can potentially go below 175. But right now, Lagarde doesn't know what the tariff impact is going to be. Something that Goolsbee also commented, that there is just so much uncertainty. So we are opening the door. If situation worsens, we are ready to take rates below neutral, maybe 150, which I think is a possibility, not my base case. But we really need to know more about the tariff data, which will happen probably in 3 months' time or 6 months' time.
Yeah, as I said on this show last week, the Doha round, the Uruguay round, any major bilateral trading deal, these things take years. How the US is going to cut meaningful, as you say, beyond the surface deals with 185 countries in pretty much 80 days. It ain't going to happen, ladies and gentlemen. There might be deals, but they're not going to be full trade deals. Mohit, we're going to leave it there. Nice to see you. Mohit Kumar, who is Chief Economist and Strategist for Europe at Jefferies. And just to say, for more on what a depreciating greenback could mean for economies around the world and why emerging market central banks may be forced to intervene, head online to cnbc.com. Coming up on the show, Italy and the United States. Well, it says here, build up trade momentum. Did they? I'm going to question that. The Prime Minister, Giorgia Meloni, visited D.C. US Vice President J.D. Vance visited Rome. We'll discuss more next.
We empower those who act. Those who see the correlation between predictability and probability. Those who manage risk by anticipating each movement. Flawless execution, timing, and accuracy. Identify the goal, match power with precision, reach new heights. CME Group, where risk meets opportunity.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
Inside the world's most cutting-edge technologies.
We're seeing a real opportunity for those with brilliant ideas to accelerate towards change.
Discover the secrets and turn innovative ideas into profitable ventures.
Our vision is a world where human prosperity and economic growth are planet positive.
Embrace digital disruption.
I mean, this is life-changing technology.
CNBC Tech, the edge, only on CNBC.
If you're really ambitious, you don't think about the end goal. You're too busy thinking about the process of getting there and the growth that you need to achieve. And nothing can beat that.
Before they talk to Wall Street, they talk to John Fort and Morgan Brennan. Closing bell overtime.
Tributes have poured in for Pope Francis, who died on Monday at the age of 88 after a stroke led to irreversible heart failure. The pontiff's body is likely to be moved to St. Peter's Basilica tomorrow for mourners to pay their respects. NBC News' Molly Hunter was at the Vatican yesterday and filed this report.
As soon as the news of Pope Francis's death was announced, cardinals from around the world have started making their way here to Vatican City. Now, tomorrow will be the first meeting of cardinals. Not all the cardinals will have made their way to town by then, but the first meeting of the cardinals who are in town. And the papal funeral is expected to be held within 4 to 6 days, and on the agenda in the next couple of days will be the exact date of that funeral. You can bet that will be on the agenda in the meeting tomorrow. Now, as far as the funeral details, Pope Francis during his life designed a lot of them. This is not going to be a huge state splashy funeral. This will be a pared back funeral, a simpler funeral, a streamlined funeral for a pastor, something more humble than what we've seen in the past. And he's made some of the changes. For example, tonight Francis's body was placed in a single coffin made of wood and zinc, not the traditional trio of coffins of his predecessor. Now he could be moved actually as early as Wednesday to lie in state in St. Peter's Basilica. And another change, he will not be buried in the Vatican grottos. Instead, he's chosen a different basilica in Rome, Santa Maria Maggiore, a basilica in the center of Rome. It was very close to his heart. He visited often. And then the attention turns to electing a new pope, the secret, mysterious process known as a conclave. It will happen in 15 to 20 days from today, from the pope's death. And as the cardinals come into town, more and more general congregations will happen. There will be formal meetings and informal conversations as well. And then, of course, they're sealed inside the Sistine Chapel. Voting will begin. Black smoke, as we know, once the ballots are burned, means no pope. And white smoke means a new pope has been chosen.
US Vice President J.D. Vance was in Rome over the weekend meeting with the Italian Prime Minister Giorgia Meloni after her visit to Washington, D.C., followed by Pope Francis on Sunday. The Vice President has since arrived in India, where he met with the Prime Minister Narendra Modi, with the two hailing progress on a potential trade deal. US President Donald Trump hosted Italian Prime Minister Giorgia Meloni in the Oval Office last Thursday, with the Trump saying he's in no rush to end his tariff policies. He also accepted Meloni's invitation to visit Rome, whilst the White House said he could meet other European leaders as part of such a trip. Sylvia, there are those on Wall Street who say this is genius. Genius. This is the art of the deal in motion. But the problem is, one of many problems, we don't know what's art of the deal negotiation or what actually is here to stay. When you listen to the administration, when you looked at the Rose Garden, when you looked at Lutnick holding up the placard for Mr. Trump, this is pretty much seen as a sea change forever in US relations with the world and all those countries that have been dastardly behaving with the United States, apparently. Or how much of it is a negotiation? Does anyone know yet?
The sense in Brussels is no. They don't know ultimately what is the objective here and where the conversations with the United States will actually land. Don't forget that at this stage, U.S. tariffs are still applicable to European steel, aluminium, and cars as well. So what has been paused was the so-called reciprocal tariffs, which for European products we're talking about 20% in additional duties. So what was important from the conversations between the Italian Prime Minister Giorgia Meloni and President Donald Trump was indeed the comment from the president saying that he's 100% sure there will be a trade deal with the EU. However, though, we don't know when this is going to happen, what sort of deal the president would like to see. And so there's still a lot of question marks, even after the conversations between Italy and the United States, even though when you look at it from the surface, it seemed to have been a successful meeting for the Prime Minister of Italy. The president had very warm words about Giorgia Meloni. He said once again that she's a strong leader and a strong woman. On top of that, also saying that indeed reiterating here the possibility of a trade deal. I would actually just also look at the question of defense spending here for a moment. We talked about this last week ahead of their meeting. Off the back of the conversations with Donald Trump, Giorgia Meloni did say that Italy is going to respect NATO's defense spending target of 2% of GDP this year. And now you're going to ask me, Steve, is that enough? Not really when you think about the conversations that we're already having, that the possibility that NATO has plans really to increase this target to perhaps 4 or even 5%. More broadly, though, I just want to take you to show you these comments from the Prime Minister, showing you indeed what she would like to achieve from the conversations going forward with the U.S. as well.
Even if we have some problems, okay? Between the two shores of the Atlantic, it is the time that we try to sit down and find solutions. So I want to thank President Trump for having accepted an invitation to pay an official visit to Rome in the near future and consider the possibility in that occasion to meet also with Europe. The goal for me is to make the West great again. Okay? And I think we can do it together. We can. We will keep on work on that.
So we have moved on from Make America Great Again to Make Europe Great Again, and now, in the words of Giorgia Meloni, Make the West Great Again. Let's see whether they'll manage to achieve that, because there's still a lot of uncertainty on the table, and ultimately we don't know whether the Europeans, including the Italians obviously, will manage to overcome their differences with the US when it comes to trade.
There is a lot in this Make Europe Great Again strategy, and one is that, look, Europe manages to prove it's a very open trading bloc to the rest of the world and goes on to cut trade deals. That's not been the case in recent years, and we saw the Latin America deal fall flat on its face thanks to farmers in France and beyond. Could this change? Could we see more acceleration towards some sort of agreement with other countries from here?
So that is the second leg of the strategy from the Europeans thus far. Yes, they are preparing for countermeasures against the US, but ultimately they are looking at other trade deals with other parts of the world. The question here is that this is actually a very lengthy process, and who is out there willing to sign a trade deal immediately?
Well, not according to the United States. It only takes 90 days, doesn't it?
We'll
It
see.
can be very
We'll
quick
find
process.
out. The countdown has begun. Let's see how many trade deals we'll have by the end of this 3-month period. But ultimately, my question is, can the EU also rally behind this second leg of strategy that I just highlighted? Because, again, they have a trade deal on the table with Mercosur. It hasn't been approved. The French are still against it. So they're saying that they are looking at other trade deals as a solution for the European economy, but can they actually achieve it?
There are some smart things the Europeans can do in the meantime. And I had a great conversation. I was in Versailles with Patrick Pouyanné. We've got the tape. Maybe we'll put it up again. He wants to sell European LNG, US LNG to Europe. Europe wants to buy more LNG, wants to diversify its sources. US wants to sell LNG because it's flaring a lot of the stuff or venting it, or it's just not being used productively in the United States as well.
So why is this not happening?
Yeah, that is exactly it. Man wants to buy US product, ship it over the Atlantic and sell it to Europeans. Europeans want to buy the product, US wants to sell the product. It's nonsensical that we're not buying more LNG. And it's a great argument from the Trump administration. There's a lot of things that are folly, but this is clear. Let's get this going. It's obvious it needs to happen in greater scale. And everyone wants it to happen, but there seems to be barriers to getting it done.
And I don't understand what those barriers are. I've been asking my sources, why is this not more prominent in the conversations with the United States? And I haven't received any clarity on that. I'm also posing that question. It is clear that the Europeans want to include this as part of the negotiation. The Americans want to do it too. But at this stage, I don't know. There's no clarity as to why we're not seeing more move on that
Maybe
front.
it's in an orderly queue. You know, Europe likes to put things in a queue. Maybe we just haven't got to that part.
Maybe we haven't taken the folder yet.
In the meantime, the Russians are still exporting LNG to Europe, which is that dirty little secret that people are always amazed at. Well, surely we don't buy. No, we buy loads of Russian LNG still in Europe.
Sylvia, thank you very much. UK Chancellor Rachel Reeves will also be in Washington this week, where she'll meet with her US counterpart, Treasury Secretary Scott Bessent. Reeves is expected to push for a US-UK trade deal, but she's also expected to reiterate that free and open trade is in Britain's national interest. Representatives from Ukraine, the US and the UK along with France are reportedly set to hold peace talks in London on Wednesday. That's according to Kyiv. The meeting would follow talks in Paris last week comes after Russian President Vladimir Putin promised direct talks with his Ukrainian counterpart for the first time. A look at how futures are shaping up for the Tuesday session. That's right, it is Tuesday again. We've wrapped up after
Tuesday for me.
Easter Monday. We're looking at markets losing a little bit of steam.
We're predicting good growth for tourism, so an increase by 6% in value to about £33.7 billion inbound spend this year. But the overriding challenge we have is that more than half of our visitors won't go outside London, but we want people to explore more of the country. We have launched our Star in Great Britain. That's a film and TV campaign. We use those stories that connect with people, the destinations that they see in their homes and they want to come and visit. And all around the country, we have different stories that we can tell that will encourage people to go out of London and explore more.
CNBC has the most affluent audience in television, and my job is to tell viewers how the wealthy make it, spend it, and give it away. I grew up in upstate New York. Both my parents were artists, so we didn't have money, but they taught me to appreciate beauty and also see things a little bit differently. For a lot of people, their ambition is to get wealthy, but money itself doesn't have any meaning. It's how you make it and what you do with it that gives it purpose.
Squawk on the Street, CNBC.
Welcome to Squawk Box. If you are just joining us, I'm Karen Cho with Steve Sedgwick, and these are your headlines. European markets turn negative as European equity markets are poised to return from the long Easter weekend, coming off yet another Wall Street sell-off. US equities plunge once again at the start of the week as President Trump rails against Federal Reserve Chair, calling Chair Powell a major loser for not cutting rates faster. The greenback faces a confidence crisis as tariff worries hit demand for the dollar, sending it to a three-year low. And Roche pledges to invest $50 billion in the US in coming years, following hot on the heels of Novartis as European pharma giants adjust to Trump's tariffs. Let's take a look at those Asian markets and what we're seeing on the back of selling stateside. We've got patches of red across in Japan and South Korea, but elsewhere we are seeing Chinese markets trying to push firmer from Shanghai to the Hong Kong market, a modestly firmer territory. Now, it was a rough day stateside in case you missed it, and we're enjoying some of the festivities over the Easter long weekend, but we shed nearly 1,000 points on the Dow, and now is what is being termed one of the worst performances for the Dow for April since the Depression. So we are seeing again, another pullback, almost 2.5%. We roll on to more earnings from the Mag 7 stocks this week, as well as some of the big defense names, so that will impact the likes of the S&P 500 and also the NASDAQ. But in session, it was, of course, technology names that were hard hit yesterday. Now, the pressure we're seeing that Donald Trump applied to the Federal Reserve Chair, Jay Powell, is also causing the dollar to again be a casualty. Some of that lack of confidence on top of the tariff uncertainty is unhelpful. And as a result, we've got much stronger ranges for euro dollar. We popped through the 115 handle on pound, cable 134 plus. Dollar is also showing us a little bit of appeal this morning versus the Japanese yen, 0.5% firmer, and dollar holding the line now versus the Swissy. It was weaker early on. I want to take it to the gold trade. Bullion has been a real star performer for 2025. And again, this morning we're sitting just shy of 3,500. We're up about 1.7%. European futures. We had a catch-up week last week as these markets tried to close the gap with the performance of the US markets a week earlier. Now, as we get going this week, it looks like we will trade in lockstep, at least initially, picking up on some of that red ink from Wall Street yesterday when we were shut. So we're looking at some slightly softer ranges from the outset. Italian stocks, though, looking to lean forward, Steve.
Take this next story with a pinch of salt. I'll tell you why in a moment. Japanese investors have sold more than $20 billion in foreign debt after US President Donald Trump shook markets with sweeping tariff policy earlier this month. The Japanese MOF, the Ministry of Finance, revealed that $17.5 billion worth of long-dated international bonds were sold by private institutions in the week to the 4th of April, whilst a further $3.6 billion were sold over the following few days. That sounds a big deal, doesn't it? Hold your horses, ladies and gentlemen. The Japanese, as a state, still own around about $1.2 trillion worth of US Treasury debt. Okay, so yes, that story is accurate, but you put it in context, there is no meaningful sell-off from the Japanese of US Treasury holdings. So there's the story, which is accurate. then there's the context, which is what Karen and I try and give you on a daily basis. Right, Japanese investment bank and brokerage group Nomura is set to buy Macquarie's US and European public asset management business for $1.8 billion in an all-cash deal expected to close by the end of this year. It's the biggest bank international expansion since it bought the Asian and European assets of Lehman in 2000. Was it 2000? I remember it. I went on the floor. There was a clash, I tell you. So there was Dick Ford's old Canary Wharf office. You've got all the old Lehman chaps, ladies and gentlemen, and you've got the new Nomura, ladies and gentlemen, chaps. That was a clash of cultures, I can assure you. I remember being on the floor at the time.
I think I remember this story. Macquarie was obviously very active in the markets pre-financial crisis as well. Yeah. And this tie-up seemed certainly one that was left in the wake of that financial crisis. Now, speaking of which, what lies ahead? European exit markets are most at risk from tariffs, while deals will be most insulated, according to analysis from Pitchfork. Now, market volatility may also have pushed the IPO window into 2026, it says, forecasting a recovery in valuations and volatility in the first half of next year. Naveen Rajan joins us, our senior analyst at EMEA Private Capital Pitchfork. Thank you very much for joining us. I looked at one of your first lines here, that curtains are closing on an IPO window in 2025. I mean, we talk about IPO windows all the time. It never feels like a bay window to me. It always feels like a tiny little louvre of opportunity. And if you don't capture it, it disappears very quickly. So where are we at now, thanks to tariffs, uncertainty around interest rates and everything else in the round?
Yeah, Karen, I mean, what a difference a few weeks make. We were talking about an IPO window in 2025, valuations and volatility being at a sweet spot. Clearly, we've seen volatility spike significantly and stay at those elevated levels. Valuations have also now in Europe come down. And we're really seeing, if we look at our forecasts and extrapolate previous parts of when markets have behaved like this, we're seeing that window really open in the first half of 2026. And we've seen exits, even outside of listings. If you think about exit markets, we've seen a lot of private equity players pause acquisitions. And it's really the sort of wait-and-see approach as volatility continues to rip through global financial markets.
I mean, it's obvious when you look at some of the big two IPOs that were expected to be real headline acts this year, Klarna and Shein. And every time I see the names, I think, good luck with that. Because, I mean, one of them, Shein, their entire model has been smashed thanks to the Trump administration. The other, Klarna, enormous uncertainty now for the consumer. And, you know, putting things on some form of finance seems a little bit of a strange prospect when you may be thinking more clearly about your assets.
Putting things on a buy now, pay later seems more of a prevalent factor.
But things you don't need.
Well, whoever bought BNPL things you need anyway?
Well, I don't know. I think some people did because it was just an option of buying more stuff. But, you know, again, to the point, I think the consumers become much more rational about necessities now. So just weigh in on that.
Yeah, I totally agree. And I think if we look at sort of sector exposure as well in the note across private markets, and consumer is one of the areas we're more cautious on. If you think about high for longer interest rates, what that does for people's mortgages, and then you think about actually just that necessity piece, and especially verticals such as food delivery and venture that we've seen underperform significantly because people don't need things that are outside of their staples. So I think
you can cook yourself, would you believe?
Yeah, exactly. Even in London, you know, in an urban city. So we've seen a lot of those non-necessity type of markets come down, and those cyclical sort of plays perhaps be less favourable in the next year. Areas that we are more focused on are ones that are more defensible, such as life sciences. We do believe there's more structural growth in verticals such as AI. So I think the consumer piece is definitely one we're more cautious on. And obviously it's been a big blow seeing big IPO candidates such as Klarna have to step away. Whether or not they come back is also another debate that's worth noting.
There's always this story going around that there's dry powder waiting to be used. I mean, you can pick, you've probably picked every kind of, everything from 1 to 9 trillion has been mentioned in the last couple of years. But let's just say, let's pick the mean. Let's say about 4.5 trillion of dry powder out there as well. Presumably, all these geniuses in private equity and VC are just snapping up assets left, right and centre, aren't they?
Yeah, I think we've seen deal activity be quite resilient in private equity and VC. So there has been, you know, deals have been quite resilient. But I think the issue is that valuations have still been quite volatile, and this adds more volatility to it, and that adds a wait-and-see approach.
Because when there isn't volatility, everyone can price stuff really accurately. When there is volatility, surely that's when as my old history teacher put it, and this is him saying it, not me, the scum rise to the top and the sludge goes to the bottom, i.e. you can really spot the variance in valuation, and there's really smart people can go for it.
Yeah, but I think that's more of the case, I think, with sort of public markets. In private markets, these are illiquid assets, right? And volatile evaluations still are at a lag and they take time to correct. It also depends on the strategy. We've seen M&A markets tend to outperform when you have periods of market distress, and private equity sure will be watching sort of those bargain valuations, but venture valuations, which correct at a much slower pace, GPs will not be wanting to sort of price assets when things are swinging in roundabouts if you want to give your LPs a good track record in terms of returns.
Yeah. Is there, and just final one for me, Karen's got a couple more. Is it a use it or lose it at the moment? Are they actually having to return the capital, a lot of people?
It's been a liquidity crunch for the last 2-3 years in venture and private equity, and it's been an extremely tough time. We've seen assets such as venture debt, secondaries rise because LPs need liquidity at the end of the day, and the IPO markets have been closed. So I think there is more of a need for LP allocations towards private markets, but because of this liquidity crunch and because of exit markets probably being closed for the next year, we're not really expecting fundraising and that sort of part of the pie to really be in a recovery over the next year. Yeah.
You mentioned AI could be an exception, which goes to what we've been seeing in that part of the industry. There was no shortage of funds for large language models or anything with AI attached to it. We've seen that in recent months, recent quarters, and even in the last couple of weeks, OpenAI still having a fairly decent valuation, raising $40 billion seemingly without having any problem whatsoever. To the point around if you're a sector leader, it does seem to cast some sort of a shadow or light on those behind you. And is that the case around AI in the private markets, that it's okay for now because the biggest in the bunch managed to get its latest raising away?
Yeah, I think it's generally the case when we look at the bright spots in VC, it's really the large startups and the big tech, as well as in terms of investors, those large funds that are going to be able to weather this storm. When you talk about AI, for instance, you've seen Alphabet still commit to $75 billion, for instance, in data infrastructure. Google, Meta also still keeping to their commitments. So there clearly is a structural growth story. And also, I think it's important to note when it comes to private markets, these are long-term assets, right? These are whole periods of 10 years or more. And so when you're really an early stage investor, you're playing the long game, and periods of market volatility, yeah, they're not great for deal making right now, but it still doesn't affect your sort of longer term return because of that longer term time horizon.
Can I get you to comment on an FT story I read? Actually, I listened to it coming in this morning. Chinese state-backed funds are cutting off new investment in US private equity, according to several people familiar with the situation. They cite CIC as one of them pulling back as well. Big story?
I think it depends. I think, USP is such a legacy market. It's got so many different LP allocations, and it's one of those markets that have been really maturing, and we believe that will be quite resilient. And you think about Europe, for instance, I think that sort of story within Europe would be more moving the needle, because Europe still is a much more nascent market when it comes to the US. We need LP allocations, and a lot of our investment in LPs come from the US as well. So if we see a step back from US investors into Europe, I think that would be significant. We've already seen, for instance, Andreessen Horowitz on the GP side withdraw from Europe because of the Trump regime. So I think moves like that are significant here in Europe.
Brilliant. Lovely to see you. Thank you so much indeed for taking all our questions. Very nice to learn so much as well. Navina Rajan, who is Senior Analyst EMEA Private Capital at PitchBook. This is a hell of a story, this one. I mean, if you're interested in picking up an EV, look at this. Chinese car battery manufacturer CATL says it could offer faster charging for your EV, or for its EVs, I beg your pardon, for its batteries, than its rival BYD, as well as Tesla. The company unveiled a new flagship battery cell which claims to offer a 520-kilometre range from just 5 minutes of charging time. Extraordinary. And said it wants its batteries to become the standard for electric vehicles worldwide. Shanghai hosts its annual auto show this week, with Chinese car manufacturers making a push to expand their reach globally. Lynn filed this report.
A lot of focus on what the foreign as well as domestic automakers will be releasing in terms of new and refreshed models, but we're also tracking the impact that the US-China trade war is having on the broader sector. And yesterday evening, I got to sit down exclusively with the CEO and founder of Hesai Technology, David Lee. Now, Hesai is in the LiDAR sensors space here, which has seen rapid adoption you've got most of the major EV names like BYD, Huawei, NIO, Li Auto that have adopted this kind of technology and really described as basically the eyes to help self-driving cars perceive their surroundings. Now, David expressed to me in terms of the tariff situation some of the frustrations that both the company as well as his US clients are dealing with, keeping in mind that some of his disclosed US clients include some of those robo-taxi companies like Zoox, like Aurora. They also supply to NVIDIA as well that use their LiDAR sensors as part of the chip testing process as well. Let's watch.
It's painful. Even though today we have less than 10% of the revenue this year coming from the US, but that's 10% of the revenue, and it's a lot of very valued customers we have with a lot of contracts extending into the next few years, right? So you can imagine, we both read this from the news, right? And then the discussion is like, how do we deal with it? Then if you boil down to the decisions we make on both ends, you realize that tariff is supposed to balance the trade, assuming that your domestic player has some slight disadvantage in price, probably only price, right? In our case, we are in a position that there isn't exactly a replacement for us.
Given the concerns in terms of the US market, David Lee said that they are very much focused on Europe here and also looking at diversification when it comes to supply chains, saying that they see Southeast Asia as a potential place for a production hub in the next 2 years. And ahead of the auto show, which kicks off tomorrow here in Shanghai, we'll be speaking with plenty more top executives of EV companies as well as those in the autonomous driving space as well. For CNBC International, I'm Lin Lin reporting from Shanghai.
Plus, L'Oreal reports better than expected first quarter sales growth, but the CEO flags challenging conditions in the US. We'll bring you more this hour.
CNBC, live ambitiously.
I just took a shower above the clouds. You know why? Because this is the Emirates A380.
Watch the markets open. Brought to you by Emirates.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
A CNBC original exploring equality.
My quote since the beginning was, don't change yourself, change the game.
If you want to be more innovative, more creative, come up with alternative ideas to solving problems, you've got to be more diverse.
And LGBTQ rights and our acceptance are on the line all over the world.
We have something to bring to the table for the solution that we can find together in this fragmented world, and music is always at the center of it.
Real lives, real stories, only on CNBC.
I've always had an ambition to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom, when there's a big news day out there, feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people, because it empowers you with knowledge and with everything that you need to make the right decisions.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show, Squawk Box, CNBC.
Welcome back. The latest CNBC All-America Economic Survey has found the majority of respondents view President Trump's sweeping tariff policies as damaging for the U.S. economy. There's a lot of information you've got to take in here. Steve Leisman's going to break it down for you.
A plurality of Americans think across-the-board tariffs are a bad idea, with most believing they'll hurt jobs and be worse for inflation. And the public is having a hard time believing there's a payoff at the end of the process. The CNBC All-America Economic Survey finds 49% of respondents say across-the-board tariffs are a bad idea, with 45% feeling strongly about it. 35% support them, and 15% are undecided. So there is some scope for the president to gain some support. Among those most negative on tariffs are Democrats, African Americans, 18 to 34-year-olds, and those Americans living in the urban environment. Most positive include Republicans, rural dwellers, those with income above $100,000, and men 50 and older. Majorities think tariffs hurt importers, the cost of everyday goods, the overall economy, and workers. But by 51 to 37%, Americans say they'll help companies producing in the U.S. Americans have also not embraced the president's concern about our allies representing an economic threat to the U.S. Mexico, Japan, Canada, the EU, and the U.K. are all overwhelmingly seen by the public as more of an economic opportunity than an economic threat. Only China is seen by Americans as more of a threat, but by a modest 44 to 35% margin. It remains to be seen whether it matters if President Trump is out of step with the broad public on tariffs and trade. The president's base backs him on tariffs, believing his policy will yield results over time. But their tariff support is 20 points below his overall support. Democrats overwhelmingly disapprove of tariffs, as do independents, by a 2-to-1 margin. Steve Leisman, CNBC Business News.
Right, I'm going to test you all on all of it. But some of the findings are extraordinary. You know, across the board, America is concerned about the tariff policy. And it goes back to the Cato survey from last year. The Cato survey is this huge survey of Americans. It was several thousand people where it talked about what Americans wanted from the economy. And it was, I might get this wrong way around, but it's pretty much 80% of Americans wanted more manufacturing at home. I think, you know, we all kind of hark back to, certainly in the UK as well, it's the same story really. We want more manufacturing. We think it gives us economic security, it gives us economic credibility. It's tangible, isn't it? Watching the ship, absolutely, watching the shipbuilding, the steel mills. So 80% of Americans wanted, this is a fact, wanted more manufacturing. I get that, totally understandable. You ask the Americans, the same Americans in that survey, a couple of questions down, do you want to work in manufacturing? Will manufacturing make you economically better off than your current job? That was the question. 73% of them said, nah, no thanks. And this is the point, isn't it? We all like the idea, and look, I put myself in this bracket. We all like the idea of more manufacturing, but then you ask us, do you want to work in manufacturing? And roughly three-quarters turn around and say, no, I don't want to do that. So who's going to do it? Just my final point. Are you going to import the labour to do it? Well, that's kind of not what's happening in the States at the moment. In fact, if anything, you don't want that labour in your country at the moment. And that's been proved clear by voting intentions.
So it could be AI, it could be robotics, but what is the end game?
It's robotics. And that's a brilliant 3D point on this one as well. It's robotics, not individuals who will be doing those jobs.
But it goes to the point, what is the end game? Is it about bringing a whole lot of manufacturing back, whether that is run by robotics and AI, or is it about better trade deals here? And are we still in a negotiating phase? So that is the big overarching point, I think, at this stage. We've got enormous uncertainty. What's jumping out to me is in a lot of the commentary, you've got self-inflicted harm, self-harm that is coming up, and what Trump is doing to the U.S. economy. And there was a great piece in the FT yesterday from Chris Giles talking about that old adage that we used to talk about, when America sneezes, the rest of the world catches a cold. And he's pointing out it might be time to retire the phrase again, because if you think about it, we've got this diversification that's been taking place. We've been talking at length about make Europe great again, other countries diversifying their lot as well on trade positions. We're now looking at a world economy that is somewhat separate from just the United States. And every time it does trip up, that it takes with it other nations. Are we now getting past that because of the diversification?
Do you think that's too bold a call? I mean, I'm just chucking it. I wonder if that... I cannot see in our lifetime the US being less important a part of the global economy.
Are the wheels in motion now? And we've seen just the other week, President Xi maximising his moment to Southeast Asian nations, trying to ensure that he's got better relations there as well. We were just talking to Sylvia before about whether we could see free trade deals between the bloc and other countries. So again, the wheels, are those wheels in motion?
I still think that's I still believe in American entrepreneurialism. I believe in the exceptionalism that has made Americans better entrepreneurs than anyone else in the world in the last 100 years. I can't see, let's be brutally honest about it, Europe getting itself more entrepreneurial anytime soon, as much as I'd like to see Europe better again. The British are trying to do something on the periphery. I can't see any of these authoritarian nations. Can you? The Chinese,
but it's
the
also
Russians?
About these countries where you had entrepreneurs being able to sell into the US, which bolstered their fortunes using that American consumer model.
Yeah.
So if that's dead, and they're looking elsewhere for opportunities.
I don't think it is dead. And that's the thing. I think America's going through a crisis. There's no doubt about it. And it needs to work out what it wants to be in the rest of the 21st century and beyond. But I still believe in that America has been exceptional, and the talent, the skill set, the way that they've innovated better than anyone else over the last 100 years. I kind of still hold faith in that.
Yeah, let's
regardless of who is in the administration.
We've got to push on. Would you believe you and I have gone long and gone over again?
No.
Unilever is reportedly threatening to pull funding from the Ben & Jerry's Foundation. That's according to Reuters, which says it's asking the not-for-profit group to agree to an expedited audit of its donations worth around $5 million annually. In its latest escalation between the two, the ice cream company sued Unilever last year to stop alleged efforts to dismantle its board and end its social activism. Swiss pharma giant Roche has announced a $50 billion investment in the US over the next 5 years. It would cover new R&D sites and manufacturing facilities in several states, creating 12,000 new jobs. The announcement follows fellow Swiss drug maker Novartis has pledged last week to invest $23 billion in the States.
Charlotte, Q1L for L's, like for likes at L'Oreal rose 3.5%. What's the problem?
What's the problem? Well, no, actually short-term, some resilience built in. Looked like the results were a little bit better than expected, particularly resilience in Europe. Things less bad than expected in China. They say things are flattish compared to a negative trend in Q4, but a lot of focus on the US and the trends that we see there. It's a market where L'Oreal was hoping to see some growth this year, helping them offset some of the weakness in China, where it's not the case there. Sales were down 3.8% there compared to a growth in the previous quarter. The company is saying they might have to raise their prices if tariffs come into play. There have been some inventory, so that effect will come in the second half of the year. They're looking at potentially producing a little bit more of their products, but that will be just a small amount. They said they have some pricing power, particularly when it comes to the Luxe division in fragrances that are produced in Europe. So they said they will increase some of those prices. Again, looking at Luxe, that's where they had the best performance. They said that thanks to their high-end fragrances, an area that has been growing very fast over the past few quarters. Luxe was up almost 6%. So while short-term, some relief, especially after some of the comments that we heard from LVMH and the weakness that they saw at Sephora, but they said that makeup was weak across the board. So that raises some questions of what we'd see in the second half of this year. And now the company kept the outlook for this year, saying they will outperform the beauty market that they see growing between 4 and 4.5%. But there's still some questions about the second half.
Charlotte, thank you very much for the scene setter before the trade this morning. As we get set up for what could be a decent start, the markets are looking to reopen after what has been a long weekend. So plenty of action, also a lot of earnings too. So this is a market poised to open up with very mixed signals, as you can see. The French market now called higher.
$1,500 movie. I don't want this flight to end.
Watch the markets open. Brought to you by Emirates.
This is CNBC on assignment at L'Oreal's US Research and Innovation Center.
Pledge is to invent the future of beauty, and therefore to do that you need the future of research centers, and that's exactly what's being built here, potentially the blueprint for our future R&D centers around the world. And it's going to serve the USA, our #1 market, but not only, because here will be invented new formulas that will serve consumers all around the world.
With a competitive beauty market constantly evolving, innovation is crucial to stay ahead. Consumers now seek products that cater to their unique skin tones, textures and concerns rather than one-size-fits-all solutions.
Personalization is definitely the future of beauty. Real personalization is also what I would call the ideal curation, is giving you the most precise recommendation of existing products, but which combination will be perfectly matching your needs, your skin tone or your hair type.
Access Middle East isn't just another finance show.
Do you think about the UAE's trajectory? We actually think very, very long term.
It's a deep dive into the region's shifting power dynamics. What's different about Trump 2.0, particularly for the Middle East? Ambitious economic drive and the personalities pulling the strings.
Tariffs, trade wars, for whatever word you want to use. I think these are all challenging, not just for China, I think for the world.
Join me, Dan Murphy, for Access Middle East, your edge in Middle East markets.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Frank Holland, Worldwide Exchange, CNBC.
Welcome to Squawk Box. It's 8 a.m. here in London, 9 a.m. CET, and stock markets across Europe are opening up for trade. We have been closed for a very long weekend for the Easter celebrations, and as we wrapped up shop, these markets were stronger. They'd been enjoying a catch-up trade last week. But of course, on Easter Monday stateside, we've seen markets again roiled by some of the tariff uncertainty and pushback against Fed Chair Jerome Powell, according to Trump, not cutting rates fast enough. So negative signals is what we've got, the handover from Wall Street. But markets this morning, you can see just modestly lower. We're giving up about 0.25% out of the gates, but some of these markets were actually caught in the green on futures. So a bit of a mixed bag, I think, is what we're seeing on the open this morning, Steve.
Yeah, US futures, they're mildly higher, aren't they, after the stocks tanked, is the headline we're running on our website at the moment as well. But we've got Tesla numbers later as well. I mean, that's going to be fascinating. I think that's after the bell, though. Right, what have we got? Household goods up 0.6%. Autos up 0.5%. Basic resources and chemicals and retail also rallying. Not a huge amount of conviction to some of those sectors, is there? Retail then up 0.2 as well. Let's have a look at which sectors that are down in negative territory. And is it going to be the technology names again, like we saw in the States? Yes is the answer. 0.9% easier. Interesting to see oil and gas actually moving in the opposite direction to Brent. Brent's trading 66.92, so it was still on the front foot as it was at the most of last week, up 1%. But the catch-up in Europe means we're down 0.7%. I've seen a little bit of broker red pen this morning on one or two of the big names. Elsewhere, technology stocks, as I mentioned, down 0.9. Construction and materials, more concern about broader economic activity, down 1.2%. Financial services down 0.7%. Individual bourses look like this. Xetra DAX going to be slow to the party as ever. London's flat, which is no mean feat considering it had a decent rally off its lows last week. Just to confirm, as Karen was saying, we only had a 4-day week and we haven't been back yesterday, or some of us were in the city yesterday, but that's exciting news for you if you're watching CNBC next week, not this week. We were rehearsing, just out of interest. 82.76 is where we're trading, flat as a pancake on the FTSE. Elsewhere, FTSE MIB down 0.8%. Other indices for you, let's have a very quick look at Zurich, also down by a similar margin. We've got the PSI over in Lisbon, and the IBEX over in Madrid down 0.3 and 0.5% respectively. Karen, what have you got for us?
I'm going to take you to the big movers at this hour. So we've got Hydro at the top, 3.6% bounce. Investec moving higher. Stellantis, that one's interesting. The automaker has been travelling around the lows so far year to date, but it's pushed up by 2.6%. And Barclays helping out Pernod Ricard this morning, the drinks maker, with a target price change and a higher rating on the stock. So that broker change moving the needle on Pernod Ricard. But to some of the losers, stocks that are opening up after this long weekend and slipping aggressively, you've got Novo Nordisk down 8.5%, Ørsted losing near around 6%, Carnival dropping, Zealand also in the red, and Siemens Energy, I'm going to call that one of the most volatile stocks in Europe this year. Just take a look at the chart year to date. It's very interesting just how many highs and lows it's been experiencing. That stock is down heavily this morning. But to the upside, just as we popped open, we did see L'Oreal moving into firmer territory towards the top of the Stock 600. Its Q1 like-for-like sales rose 3.5%. But the CEO flagged challenging conditions, particularly in the United States. Charlotte, this one has become more complex in recent years. We've seen a ton of contenders in the beauty space that have been challenging some of the big names, but there's also been a lot of luxury brands that have tried to bring out makeup products. And of course, we've got a consumer who's more challenged now. So just walk us through those numbers.
Yes, lots of competitors coming on the stage. We were saying some smaller disruptors, the big luxury players. That's because that's an area that has more resilient. The old famous lipstick effect. There's a market that can grow even in tougher times. So all eyes on these results of whether we start to see any resilience or any weakness transpiring. So it looks at the moment there is some resilience. These numbers were better than expected there. But there was a lot of focus on the US numbers. It's a market where they were expecting and hoping for big growth this year to help them offset some of the weakness in the Chinese market, but the numbers were weaker than expected. Sales were down 3.8% in the quarter after some growth in the previous quarter. They said that they will need to raise some of their tariffs to offset some of increase their prices to offset some of the tariffs going forward, mostly on their luxe products. So they said it has some pricing power on that front, particularly on their fragrances. They will have to do that. They said they built some inventory on several brands, so they will expect to see that impact on pricing in the second half of the year. They saw China, though, flattish compared to negative trend in the last quarter, so things were slightly better than expected there, and resilience in Europe. But here again, as in looking at the divisions, luxe as well, that was doing better, up 5.8%. Here again, the rush to high-end fragrances, they're benefiting from this. They have perfumes for Lancôme, Prada, Miu Miu. Lately, they announced also a deal with Jacquemus, so that's helping them offset some of the weaknesses. So in makeup in particular, so in mass or luxury, that's a category that fared the worst there. So resilience for now, but a lot of questions for the second half of the year, the impact of tariffs and whether we still see that resilience in Europe. And so at the moment, they still aim to outperform the beauty market that they see growing between 4 and 4.5%, but there's still some questions. So some relief there. That's why we see the stock up 2% this morning. A stock that is down 22% over the past 12 months, so still faring much better than some of the US competitors, whether it's Estée Lauder or Coty, both down more than 50%.
Charlotte, to me there's been a subtle shift in the industry away from just marketing, putting a very attractive model at the forefront of a makeup campaign and consumers thinking that they might look like that model if they use the product, to actual performance. And if you look at some of the announcements, and this is in all categories, that they're spending more money on producing very glossy, sleek hair products, the peptides that are improving the quality of the skin and the youthful appearance. To me, this is almost a pivot towards more research and development. More product innovation is what is costing them rather than just the marketing side of the ledger. Yeah. Would you agree?
And they said that when I met the CEO a few weeks back, we had this big long sit down. They say innovation is key because, you have to bring, there are a lot of shampoos out there, but you have to bring the latest innovation, what is going to protect your type of hair, etc., to make the clients want to buy this. They have to create that demand. And so that's why the dermatological beauty segment, the one that have products that are less pretty maybe on the shelf, but that's seen as more potent and that some doctors might prescribe as well, whether it's from La Roche-Posay or Vichy, is doing particularly well. It was interesting to hear recently from L'Oréal how they're expanding in other areas as well. Had they, of course, made an investment in Galderma, so injectable, and also they have made some investments in clinics in the US as well. They want to study that market, so they're looking at the beauty in a more broader term as well, not just buying makeup, etc. And they're also entering the market for vitamins, supplements this year as well. So there's all these areas. They're looking at beauty in a wider way. So while fragrances is doing very well for them, they're also looking at other areas where they can develop beauty in a wider term, because a lot of people, whether you look at
we all use too much of this product. I'm not going as far as saying that people did all those trials a few years ago where they didn't wash their hair, and apparently the natural oils. You're looking at me in absolute disgust. Did you not remember all this?
It's fine if you don't use product as in hairspray and everything else on it, and you just let it be natural. I could see that.
I don't even know if it is, but there was a lot of people saying, no, your hair will have natural oils and it'll go back to its natural state. But are these companies trying to get, with respect, aren't they getting people to wash their hair too much and do too much cosmetics, which is creating all kinds of problems?
I don't don't agree. I mean, don't forget we've got the whole rise of South Korean performance products as well. These things that are in a bottle are meant to actually improve the youthfulness of the appearance. And the reality is...
Doesn't overwashing your hair create damage?
I'm not talking about the hair. Let's just put the hair aside. We're talking about the face. We're talking about the skin quality.
I mean, you know, I don't look after this hair by overwashing it.
Well, maybe it could be shiny and sleeker if you tried some different products.
Which one? Which one? That one or that one?
Well, I think that little
one over there.
follicle over there on the far left in the back corner.
These are the
that one all by itself over there.
These are the makeup ladies. She just have to stop laughing half the time when I say, I just need a little bit of spray
the
there.
The wide tooth comb's not going to work for you, is it?
Put it this way, she spends a bit more time on your hair in the mornings than mine.
There's a bit more of it, volume-wise.
No, but seriously, aren't these companies getting... It's actually a serious point. And I say this because how many daughters have we got between us? 5?
Yeah.
My water bill's gone through the roof since they became teenagers. It's a nightmare.
Well, this
they
is
wash their hair way
I've been
too much.
talking about that you use less water having to wash out these products because they dissolve more. So they've actually been working on these sustainability efforts for years. So your water bill isn't as high.
You're now telling me that it's sustainable.
If you've ever stood under a shower with very long hair back in the day
trying
to wash out products.
Have they taken those out?
They're working on it.
Well, they're working on it, yeah. I'm working on not eating cake, but it's not going well.
You're right. There is a paradox in an industry that they try to sell you something to have this natural beauty look or to age better. Well, actually, they say they have to create that demand. They're very open about it. They say we have to create demand. So you're right. It reaches a point that when it comes to sustainability, you're selling products to people that they might not need.
There's a great
so there is that
about,
fine line
about women who go grey. Some of the most beautiful women on the planet
but grey hair
are
needs
allowing
some
their hair
particular
to
care as well.
Let them go grey. That's great, isn't it? Well, then they don't need the colouring products. Then it's great. A whole
no, but
whole
you
genre
need a specific
of
care.
products
When you have grey hair, coloured hair, you don't need the same products to look after your hair.
Didn't we just talk about
Clooney
to just change the colour of his hair?
Should we push on and talk about... Should we talk about drinks and luxury now? We've got you staying with us for a little bit, Charlotte, and I want to just move on to what we're seeing out of the luxury space because we had a large number of earnings before we got to Easter from the space, and I think May's was, of course, the latest rounding out the mix. Here's how we're travelling for the week. We've got LVMH, the bellwether, a little bit weaker. We've got Kering, the owner of Gucci. That is higher. And it's just fascinating. We've seen a bit of movement in Kering stock lately, even as we wait for the new strategy from the business. Hermès is weaker. And we've got Richemont also sliding today. We're going to talk about the drinks makers too, because I mentioned Pernod Ricard. That got a ratings change from Barclays this morning. And you're seeing that stock higher by about 1.5%. Campari a little bit firmer and stronger cues there on Remy Cointreau as well. So, Charlotte, this goes back to the tie to the lipstick effect, whether we go back to the good old defensive basket where people are buying the lipstick because they're concerned about the economic outlook. They'll still treat themselves to a lipstick and they'll also treat themselves to a bottle of spirits as well. Do you think we are seeing any resilience at all from these sectors?
It's a sector that's been so hard hit recently. You remember in COVID, they were talking about everybody having cocktails while locked down at home, and that really boosted all these spirits maker, Pernod Ricard in particular.
But not the travel segment, not the duty-free segment. That was
no, exactly. So this one's suffering. So then things reverted as well. And you remember they had this strategy of the premiumization of drinks as well and pushing for some of the higher-end spirits as part of those cocktails. And of course now, fast forward a couple of years, things are much tougher, and the talk about tariffs has been impacting them, the slowdown in China as well, less cognac being drunk there as well. Now the question of tariffs, how this will impact and how much can they increase prices? Because we know, a bit like in luxury products, prices have gone up quite aggressively recently. And so they've kind of hit a roof. And so how much of the tariffs and of the add-on price can they add to the price tag that is already so much higher? And so there's been this whole conversation recently. But here again, some resilience I've seen from what we heard from LVMH. Champagne was the most resilient of the basket that they have, while cognac was really suffering. Champagne. So maybe here again, the same trend that we've seen in other bits in luxury, the higher end is more resilient than some of the other lower end.
Recover too. Do you see a bunch of Americans at the airport sort of loading up on cheaper spirits to get around the tariffs here at the airport before they hop on the plane? I mean, is that going to be a thing? Take a photo of American with a whole heap of products that they're taking back to the States?
Well, especially when there's a lot of question marks on how much travel will be impacted by it. We've seen the number of Europeans going to the US dramatically slowing down in terms of bookings. Will we see this the other way around. We haven't seen this significantly just yet, but there's a question of if Americans see their spending power reduced because of the tariffs and because of potential extra inflation, will they start to travel less? And of course, that will have an impact in some of these brands as well.
Okay, great. Thank you very much. My family had some of that Kent champagne at the weekend. Not allowed to call it champagne, though.
It's sparkling, isn't it? Let's face it.
It's not. It's the same stuff. It's the same grape, same kind of soil.
Different finish.
You're not allowed to call it champagne.
It's a different finish on the palate.
I wouldn't know, but Chapel Down.
I've done a good like-for-like comparison. I've done a lot of due diligence on this.
But the French are buying up...
It's good.
Aren't the
It's not the
French
same.
champagne makers buying up as much as they can of Sussex and Kent so they can produce the champagne?
Well, that's where it gets interesting. If they can bring the same finish on the product that they have on champagne.
Novo Nordisk shares, if you have a look at those, they're down quite aggressively. Down 8%. This is interesting. A lot of people don't want to go near a needle, because they want an oral version of the semaglutides, these GLP-1s. And Eli Lilly has published positive phase 3 results for its oral weight loss drug. So that sent a major rival, Novo Nordisk, down. It's an interesting piece. I'm going to Yahoo Finance on this one. I'm sure CNBC's got a good bit of copy as well. But more than 2 out of 5 American adults are obese, according to the Centers for Disease Control. But a lot of Americans, a lot of people generally, just don't want to go near a needle. I get that. They're terrifying for a lot of people. But Morgan Stanley last year said the global market for obesity drugs could increase 15-fold to reach $144 billion by 2030. But here's the point. Lilly readout from the recent results for its Achieve-1 study, phase 3 clinical trial, which is the first of several, of an experimental oral GLP-1 treatment called, I've done this now, orforglipron.
Oh, wow.
Orforglipron.
Seems easy.
That's the trial. Yeah, I should have gone to air on that one a bit earlier. Here's a closer look at the... Anyway, basically, pretty positive stuff. And as such, Eli Lilly, very positive for them, not so good for Novo Nordisk.
We're well off the 1,000-odd level that it was tracking at mid last year.
Wow.
That's a long way down, isn't it?
It's a huge decline, isn't it? Right, coming up on the show.
Ahead, Chinese car battery manufacturer CATL says it could offer faster EV charging than its rival BYD, as the two leave Tesla in their dust. We'll have details next.
CNBC. Live ambitiously.
Nice try, Squirt.
What the heck is that?
It's toothless. Me away.
Vikings, I have returned.
Yeah?
Oh, you've got to see this.
One of 5 immersive worlds in Epic Universe, only at Universal Orlando Resort.
The ultimate pre-market morning news show. Squawk Box, CNBC.
On the next Converge, meet rising next generation leaders shaping tomorrow today.
Keep on learning. Never be satisfied with just today's outcome.
It is our responsibility to adapt. However, I think it is also important not to compromise on your values.
Whatever decision we make as a company, we always keep in our mind, what good can this do for our country as well?
Doing good for business and society are not mutually exclusive.
Find out how they're redefining leadership on the next Converge.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Swiss pharma giant Roche has announced a $50 billion investment in the US over the next 5 years. It will cover new R&D sites and manufacturing facilities in several states and create 12,000 new jobs. The announcement comes after Swiss drug maker Novartis also pledged last week to invest $23 billion in the states. UniCredit says its deal with Banco BPM remains in limbo. This after the Italian government imposed so-called golden power rules on the takeover, only allowing it to go through if UniCredit fulfills certain criteria. In a statement, the Italian lender said it responded to authorities in Rome, but added it could not take a final decision on the deal at the present time.
Chinese, this is a huge story actually. You may think, it's just a Chinese battery story. I think it's huge, especially if you're oscillating about buying an electric vehicle because you just got range anxiety like I have. Chinese car battery manufacturer CATL says it could offer faster charging for an EV than its rival BYD, as well as Tesla. The company unveiled a new flagship battery cell which claims to offer a 520-kilometre range from just 5 minutes of charging. Yeah? And said it wants its batteries to become the standard for electric vehicles worldwide. Well, I mean, if that's the case, that's a game changer, isn't it, that kind of stuff?
Well, does it fast forward EV adoption is the question,
yes.
Because don't forget it does supply to Tesla.
If they can roll out the
Shanghai.
infrastructure, and that's another if, it's always an if, then yes.
So it supplies to Tesla, so is it necessarily Tesla killer? Maybe it's good news after the BYD story the other week.
They don't just supply Tesla.
No, they also are a strategic partner with BMW. Mercedes-Benz, a strategic partnership.
Came up with a good battery the
Volkswagen
other week as well.
They're suppliers. So a lot of European names team up with CATL. So is that good news in terms of one of the range anxiety issues that the consumer still has with EVs?
There are many issues why. Okay, let's use me as an example. I live in the British countryside, which means it's not like living in the middle of Wyoming or something, but it is still the countryside.
Yeah.
I have range anxiety, and I also actually think that the most efficient, cleanest diesels and cleanest ICE engines are actually still pretty good vehicles as well. And rather than me buying a new EV, is it better for actually me to carry on with the vehicles I've got? So there's taxation issues, there's range issues, there's infrastructure issues, there's actually, do I want to do the wasteful thing of buying a new car when I don't need one? So there's a lot of issues. But if you can tell me that I've got a product that is not going to take hours to charge and is going to get to and it's going to be a decent price as well, then that changes it, doesn't it?
So you're a non-city slicker these days.
I'm a non-city slicker for well over a decade.
That's your story. But I have similar issues, and you would not think that I would because I'm in an urban environment, but I don't have the same access to
you
charging.
haven't got a charger outside
and I don't always use my car.
Massive property.
And we all know if you don't always use a car, sometimes the battery gets drained and it doesn't contain the same property. So I'm worried if I go to hop in the car and then it won't work either.
So what's happened
for both of us?
What's happened in the 14 years I left London to car sharing now? Because it seems logical to me. I think if I lived where you live, I probably wouldn't own a car, but I would I would kind of use the
I did
the
car share
club
at
stuff.
the time, but the insurance is very high.
But you don't
if
need
you have
to,
an
do you?
accident, you do. So you sign up, and the excess,
okay.
right? The excess is actually very high. I think at the time it was somewhere between $8,000 to $1,000.
The driver of your prom won't have accidents.
Well, things happen. I mean, that's
You're
why
like
it's
the
called an
Mario
accident.
Andretti of
An accident
West
happens,
London.
right? Well, touch wood. Let's keep that record intact. But things do happen, and sometimes it's not your fault, and then you still get blamed anyway.
Yeah, no, I hear you. The Shanghai Auto Show is going on this week. It's going to be fascinating. Chinese car manufacturers making a big push to expand their global reach. Of course they are. They're looking for other markets outside the US, especially. Lin filed this report.
A lot of focus on what the foreign as well as domestic automakers will be releasing in terms of new and refreshed models, but we're also tracking the impact that the US-China trade war is having on the broader sector. And yesterday evening, I got to sit down exclusively with the CEO and founder of Hesai Technology, David Lee. Now, Hesai is in the LiDAR sensors space here, which has seen a rapid adoption. You've got most of the major EV names like BYD, Huawei, NIO, Li Auto that have adopted this kind of technology and really described as basically the eyes to help self-driving cars perceive their surroundings. Now, David expressed to me in terms of the tariff situation some of the frustrations that both the company as well as his US clients are dealing with, keeping in mind that some of his disclosed US US clients include some of those robo-taxi companies like Zoox, like Aurora. They also supply to NVIDIA as well that use their LiDAR sensors as part of the chip testing process as well. Let's watch.
It's painful. Even though today we have less than 10% of the revenue this year coming from the US, but that's 10% of the revenue, and it's a lot of very valued customers we have with a lot of contracts extending into the next few years, right? So you can imagine, we both read this from the news, right? And then the discussion is like, how do we deal with it? Then if you boil down to the decisions we make on both ends, you realize that tariff is supposed to balance the trade, assuming that your domestic player has some slight disadvantage in price, probably only price, right? In our case, we are in a position that there isn't exactly a replacement for us.
Given the concerns in terms of the US market, David Lee said that they are very much focused on Europe here and also looking at diversification when it comes to supply chains, saying that they see Southeast Asia as a potential place for a production hub in the next 2 years. And ahead of the auto show, which kicks off tomorrow here in Shanghai, we'll be speaking with plenty more top executives of EV companies as well as those in the autonomous driving space as well. For CNBC International, I'm Lin Lin reporting from Shanghai.
Shares of Tesla fell 6% Monday ahead of its closely watched first quarter earnings report due today. Investors are expecting the EV maker to report just under $21 billion in revenue. That is a significant drop compared with the previous 3 months. It comes after Tesla reported a 13% year-on-year decline in first quarter delivery numbers, its worst quarter since the beginning of 2022. Analysts are also increasingly worried about CEO Elon Musk's involvement in the US government. In his latest note, Wedbush Securities analyst Dan Ives urged Musk to take a step back from the so-called DOGE, Department of Government Efficiency, or risk serious brand damage.
Let's take a look elsewhere as the US Department of Justice and Google are back in court this week as the antitrust trial over the tech giant's search engine continues. The DOJ is seeking an order that would require Google to sell its Chrome browser. Eamon Javers filed this report.
Attorneys for Google argued in court Monday that the U.S. government's quest to break up the company is too aggressive and would unfairly benefit its competitors. But Assistant Attorney General Gail Slater pushed back on Google's argument that the Department of Justice's proposed fixes are dangerous and irresponsible.
You know what is dangerous? The threat Google presents to our freedom of speech, our freedom of thought, to free American digital markets. You know what is irresponsible? Leaving Google's monopoly abuse unaddressed.
The Department of Justice also argued in court that Google wants to pretend the judge's ruling that it's a monopoly never happened, and suggested the company's arguments that breaking it up threatened privacy and security just don't make any sense. The proceedings are being held before Judge Amit Mehta of the U.S. District Court for the District of Columbia, and they're expected to run for several weeks here, but a decision from the judge is not expected until late summer. For CNBC Business News, I'm Eamon Javers in Washington.
Alphabet stock, of course, is in focus this week. We've got the company reporting later this week. Already there are reports that the ad market could be impacted. Two of the biggest advertisers in recent years, Temu and Shein. Of course, we know that those companies have been hit. So there was a report from Piper Sandler.
Back, haven't they?
Exactly. Piper Sandler was pointing to fears of an 18% impact to growth forecasts for the 2025 global ad market this year. So whether that started to crystallize in Alphabet numbers this week, that'll be fascinating, not just what's happening with the DOJ around Google and what type of test that means for monopoly power for these big tech companies.
Right, coming up on the show, we're going to discuss the impact of US tariffs on Canada, as well as the country's opportunities for closer ties with Europe with the Canadian Economy Minister, Christine Fréchette. That's coming up after the break.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
Next on Unlocked, dramatic renovations.
I'm not sure we would have done the renovation in the beginning if we'd have known what it was going to take.
Three friends bought an abandoned high school and transformed it into this apartment building. A couple turns an absolute wreck into their dream home, then say goodbye to electric bills. A 117-year-old house gets a total recharge. Now it unlocks more energy than it consumes.
Getting rid of gas and moving to a completely electric building.
Next on Unlocked.
Welcome to Squawk. I'm Steve Sedgwick with Karen Cho, and these are your headlines. European equities, well, let's take a look. They are broadly lower after yet another Wall Street sell-off. President Trump criticizing Fed Chair Jerome Powell for not cutting rates faster, but it's water under the bridge as U.S. futures point to a partial recovery later on today. L'Oreal shares rise towards the top of these stocks after Q1 like-for-like sales rise 3.5%, but the CEO flags challenging conditions, especially in the United States. UniCredit and Banco BPM both trading lower. Their takeover deal left in limbo as the Italian government imposes so-called golden power rules. And Roche pledging to invest $50 billion in the US in the coming years, following hot on the heels of Novartis as European pharma adjusts to Trump's tariffs.
Let's check on the market action this morning. We've been tracking open for about 30 minutes so far on the back of a very long weekend. And so far we've got a fairly stable picture for the FTSE. It's flat versus some selling that's moved on to the boards for German stocks, tracking lower by about 1/3%. Slightly steeper fall in the French market. At one stage it looked like it was going to be opening higher, so that is seeing some slippage today. And we've got Italian stocks also giving back territory. On the back of what was a fairly rough session stateside yesterday, nearly 1,000 points again stripped off the Dow. So very weak performance for April as this tariff uncertainty lingers and the attack on the Fed unwelcome for markets, testing the credibility of Jay Powell. So this is seen as a negative for those looking for, again, some clarity or stability, at least from the central bank at this point, as a backstop. To what we're seeing from various different sectors, the improvers today are just underpinning this market and stopping a further decline. Insurance stocks up 0.8. Firmer picture for real estate. Retail names are higher here in Europe, and utilities trading a little bit stronger. So some of the losers at a sector handle, those that we're seeing some slippage, it's technology. It's a big week stateside too for those Mag 7 stocks. A couple of early reporters will be out from Alphabet to Tesla later on today. So we're looking at some of the numbers from that sector to see how tariffs and some of the economic uncertainty, how that's catching up with technology. So there may be some blowback in Europe, industrials, construction, travel and leisure, rounding out the weak areas.
US Vice President J.D. Vance was in Rome over the weekend, meeting with the Italian Prime Minister Giorgia Meloni after her visit to Washington, D.C., followed by Pope Francis on Sunday. The Vice President has since arrived in India, where he met the Prime Minister, Narendra Modi, with the two hailing progress on a potential trade deal.
US President Donald Trump hosted Italian Prime Minister Giorgia Meloni in the Oval Office on Thursday, with Trump saying he's in no rush to end his tariff policies. He also accepted Meloni's invitation to visit Rome, while the White House said he could meet other European leaders as part of any such trip. Meloni vowed to keep working with the US.
Even if we have some problems, between the two shores of the Atlantic, it is the time that we try to sit down and find solutions. So I want to thank President Trump for having accepted an invitation to pay an official visit to Rome in the near future, and consider a possibility in that occasion to meet also with Europe. The goal for me is to make the West great again. Okay? And I think we can do it together.
We can.
We will keep on work on that.
UK Chancellor Rachel Reeves will also be in Washington this week, where she'll meet her US counterpart, Treasury Secretary Scott Bessent. Reeves is expected to push for a US-UK trade deal, which is also expected to reiterate that free and open trade is in Britain's national interest. And of course, it is the IMF this week, so we'll be getting a lot of news flow out of Washington.
You missing it?
Yeah. But hey, it's lovely spending extra time with you.
There's a very good reason why you're not in Washington, but we'll reveal that to everyone on Monday.
We never rehearse anything, but we're doing a lot of rehearsing for something special.
We need to. European Commission President, I might get it right, European Commission President Ursula von der Leyen says countries are lining up to work with the EU as President Trump's tariff policy reshapes global trade. Speaking to Politico, von der Leyen said countries including Canada, New Zealand and India are looking for, quote, strong, reliable partners. Well, Canada has faced rising trade tensions, of course, with the United States, with many exports hit by new tariffs. Christine Frechette is Quebec's Minister for the Economy, Innovation and Energy. And Karen, we're actually delighted that you can join us here. So, Christine, lovely to see you. Thank you so much indeed for joining us. I have just been looking at the major exports of Quebec, which is a real powerhouse in many ways, from refined petroleum products, raw aluminium, gas turbines, iron ore, planes, spacecraft, a large amount of this going to the United States as well. So it is obvious for everyone that Canada has been extremely badly hit by oscillating trade relationships south of the border. How are you managing to mitigate that?
In fact, the most important burden is the result of the uncertainty that is being created by the Trump administration, because there is a lot of unpredictability coming from the administration of President Trump, and this brings many businesses to halt their project for modernizing their businesses. They are stopping their investment, waiting to see how it's going to evolve. And therefore, we ask Canada to take action because tariffs and border controls are a federal responsibility. So we ask the Canadian government to establish retaliatory measures that will not hurt our own businesses.
Christine, it was a Trump presidency that agreed the last big trade deal with Canada and Mexico, the USMCA. And on the surface, and I just want your reaction to this, it sounds very reasonable that Trump is saying, no, anything that's USMCA compliant, we're fine with as well. It's the stuff that's not compliant with it as well. If I was taking an American point of view, I would totally understand why you want more compliance with USMCA.
In fact, we need a stable context for business. Our economies are truly integrated. We have a lot of business.
I've seen the electricity that goes across the border in both directions. It's very complex.
We do export electricities, Ontario as well, and we have a big plant in order to double our electricity production. We have clean, renewable and stable, reliable energy, and this is an asset that is important, a strength that is important for Quebec. And so we need to increase our trade relations with the U.S. and with Mexico. The North American economic space is an important player at international level. But what is going on is a sort of disintegration of our economies, a sort of North American Brexit, I'd say. And therefore, this is not a good news for North America as a whole. And not only for Quebec and Canada, it's being negative, but also for the U.S. economy.
Because I thought, and I've spent a lot of time looking at US energy over the years, and this is more of a statement than a question. I thought Canada was part of US energy independence, or North American energy independence. I didn't realise it was part of the problem. apparently.
I want to get to the end game because you mentioned some sort of Brexit-style outcome here. I think some are still hoping we're just in a negotiation phase, even if it is a very strong reaction by markets that we're saying that it could just be a maximum bravado moment from the administration, from Trump himself, the art of the deal. Is that the case? Are you still hopeful that there could be a way out of all of this?
Yes, we are really hopeful, and we hope that negotiations will start very soon. And there was a first discussion between Mark Carney, the Prime Minister, and President Trump, and they agreed to start the negotiation as soon as possible. And so we think that right after the election, the Canadian election, in a few days, there will be the beginning of these negotiations. We need a stable economic space in order to do business and to increase the integration between our economies. We have different strengths and we need to take advantage from them, and Mexico as well is an important partner in this.
That's it. Investors and businesses can only hold their breath for so long before they pass out, and the question here is whether we're now getting to territory where we're looking at recessionary signals because the lack of certainty has gone on for too long. What are you seeing in terms of local businesses and their ability to weather this storm?
In fact, they need to invest, even though the context is uncertain, and they need to diversify their export markets. And this is why I'm in UK, because we want closer ties with our European partners. Europe is a natural market for us, but we need to increase our ties with European countries. We are too dependent from the American economy.
Is Europe a friend, though? Because everything you just mentioned, or Steve mentioned, in terms of what you focus on and what you make in the local area, it sounds like a competitor to Europe. And to me, it sounds like now, instead of being further up the food chain, making you more resilient, more protected, you were just a threat. We've got a threat from the Chinese coming as they move into these higher manufactured goods, a higher quality level. We've got a threat from the United States that's seeking to pull up its borders. Europe is seeking to make Europe great again. It feels like there's no protection, even if you're very high up the food chain now. Would you agree?
In fact, we are a small economy, so we need to have commercial ties with a lot of countries. The American market is a natural one, but we need to have ties with other part of the world. And Europe, France, UK, Germany are important market for our businesses, and we need to help them increase their trade relations with all these markets and in other places as well.
Can I ask you about Quebec? Because it's almost an anomaly for us, the Europeans, to understand it. It's a part of Canada which prides itself on a degree of independence, and yet at the same time you're asking for greater integration with other parts of the world as well. Is there a slight contradiction in what Quebec and Quebecois want from A, relations with the rest of the world, B, relations with the US, and B, C, dare I say it, relations with Ottawa?
In fact, we want political independence, autonomy, but economical integration.
Well, it sounds like the Brits.
That might be the case. You can have a parallel there, maybe.
Yeah, well, goodness, don't do what we did. We made a right old mess of it.
Our political system is quite different from the American one.
Yeah.
So we need to have our own system. But economically, I think that we do have an interest, a shared interest in integrating our economies. And we've been doing so for decades.
Sure.
And businesses have been North Americanizing themselves for decades as well. So to ask them now to forget about that kind of integration throughout the North American space, it can't be done overnight.
So how do you stand? I mean, I don't know whether to lead you down this way or not, but I mean, Yves-François Blanchet, he's the leader of the Bloc Québécois. They only run candidates in Quebec, I understand. So the leader of Canada going forward is going to be Mark Carney or Monsieur Poilievre as well, or Mr. Poilievre. I mean, it's a French name. Have you got an idea of what you want to come out of this as the best possible all-round scenario for Canada?
I won't weigh in the federal election. I think that Canadians will have to express themselves in the coming days. But what we ask is that the new leader will defend our interests, our Quebec interests, Canadian interests in front of the...
Do you think Trudeau was... Again, you won't weigh into what's going forward, but where were the biggest mistakes from Trudeau?
I would not say that there was a mistake, but I think that economy is now front and central.
Yeah.
And it wasn't necessarily the case during the last years, and it has to be now. So we need someone who will defend our economic interest and political autonomy as well.
You are a politician that was beautifully handled.
You say defend, which suggests a very strong stance. Is that the right tactic? Because what we've seen, even from the UK perspective, Keir Starmer went over, was very persuasive in a way with Trump, didn't pick a fight, went back almost tail between his legs, and the reality is the relationship looks like it's intact. Whereas the Canadian position has been much more at loggerheads with the United States. Is that the right strategy? Should Canadians almost take a softer approach to get what they want in negotiating?
In fact, I think that Canadians have been really surprised by the fact that the United States would target Canada so soon in the second mandate of President Trump. I think that most Canadians would have thought that China would have been the first target instead of Canada. And this was part of a big surprise. But I think that the first call between Mark Carney, the Prime Minister, and President Trump went well. And there was a new tone being adopted. And it sends me the message that things should go forward in a different way. Should he be elected next week, or if Mr. Poilievre is elected
to say
as well?
that the relationship with the United States needs to be fundamentally reimagined, and actually the old relationship with the US, integration of the economies, tight security, deepened military cooperation. Mark Carney to say that's over. I know Mark Carney. I've met him many times. Karen has as well. And he's a tough cookie as well. We've seen him at the Bank of Canada. We've seen him at the Bank of England as well. Is that the right kind of language when you're trying to actually build up a relationship with your closest trading partner?
I think that the Trump administration has adopted an attitude sending the message that we have to redefine our relationship. And so we are answering that, okay, if this is what you want, we hope to have a lot of continuity when compared to what was being implemented before. But I think there's a new thinking, a new way of thinking that needs to be applied. Where will it lead us? We will see. But on our side, we need to diversify our trade relations because we have put a lot of eggs in a single basket, I'd say.
Don't mention eggs to the Americans. Please don't do that.
To that point around the continuity, there was this North American supply chain in recent years where there were sort of tentacles that would stretch across to Canada, to Mexico, to draw product back into the United States. Do you think those arms have now been cut off, that it really is just going to be internal borders only for those international manufacturers? Have you seen a change in terms of that perception already?
It remains to be seen. We'll see what happens. But one thing is clear for me is that no presidential decree create forests ready to harvest. No presidential decree can open a new aluminum smelter overnight or create an aerospace expertise. And so our strengths are still of interest for the U.S. economy, and Mexico's strengths are also of interest, or remains an interest for the American economy. And so we have a shared interest to work closely together, and this won't change overnight. And I understand that President Trump wants to attract new businesses in the U.S., but it'll take years.
Yeah.
But while the negative impact of his decision and tariffs are being felt right now and in the coming months and coming years. So there seems to be a disconnect between the moment where the benefits of his action will be felt and the moment where the negative impacts will be felt on the American economy.
Christine, it's been lovely to speak to you. Thank you so much for joining Karen and myself. And yes, I will redress the fact that I've only been to other parts of the country and I haven't actually been to Quebec yet. But I was just looking up the most obvious point on the world, and it's when's the best time to visit Quebec? And it's the fall as ever, isn't it? Everyone always talks about the fall.
Summertime, winter if you like ski, but let me know if you come and I'll make you...
hands up for the winter
I'll make
trip.
sure you have a tour of Montreal City.
Christine, lovely to see you. Thank you so much for joining us. Christine Fréchette, who is the Minister for Economy, Innovation and Energy in Quebec. Coming up on the show, President Trump takes aim at the Fed, sending Wall Street into yet another tailspin. His comments just ahead.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
On a $100,000 margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
It's a new science that could disrupt the medical industry.
The project is to understand the genetic makeup of Asians and to find out which of those genetic markers are ethical markers and not disease markers.
We're taking the bone marrow cells from the patient, making the edit, and we're putting it back into the patient, making a drug just for you.
I think that this technology is going to totally reshape how people have children.
The Edge dives into the world of genomics.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. cnbc.com/technology.
So I was just having a chat with Karen off camera. I said, well, how stocks? Karen just said, just don't look. In fact, there's a lovely email from... we have some very nice viewers out there. This is from Jerry, who's a viewer of ours. He said, yeah, totally agree with you, with your view about American exceptionalism. I was basically just saying, I think I wouldn't write off American companies just yet, despite everything that's being thrown. He says, though, my stock portfolio has been short-term painful, and he's got I think that's a smiley face emoji with a small tear.
How often do you think people are now checking their holdings? The buy and hold strategy, if it's in a portfolio.
Well, there's two ways of doing this, Karen.
Is it hourly?
Well,
is it minute
cool
by minute? Is it daily? Is it weekly? Is it quarterly?
You know the old adage, don't you, that every trader becomes an investor when it goes wrong.
Yes.
So a lot of people now are saying, I'm an investor. I'm an investor. I'm actually an investor and I'm dollar cost averaging. Yeah. There's a lot of dollar cost averaging going on at the moment. Meanwhile, President Trump has clashed with the Fed Chair Jerome Powell, once again calling him, quote, a major loser, and urging him to cut rates immediately. In a Truth Social post, he accused Powell of refusing to act, even as inflation pressures ease. It comes after Mr. Trump wrote last week that Powell's termination could not come fast enough, whilst the White House is now apparently studying whether the Fed chair can legally be fired before his term ends in May next year.
The Chicago Fed President Austin Goolsbee has told CNBC he's in favor of a wait-and-see approach from the Federal Reserve, especially with uncertainty around Trump's so-called reciprocal tariffs.
I think our uncertainties at this moment, and why for me personally, when I hear Jeremy saying preemptive cuts, we're getting announced retaliation. We're talking about revisiting the tariffs in 90 days. And we don't know what the impact on the supply chain is going to be. So I think we want to be a little more the steady hand and trying to figure out the through line before we're jumping to action.
The latest CNBC All-America Economic Survey has found the majority of respondents view President Trump's sweeping tariff policies as damaging for the U.S. economy. It's a really interesting survey. Have a look at what Steve Leisman has to say.
A plurality of Americans think across-the-board tariffs are a bad idea, with most believing they'll hurt jobs and be worse for inflation. And the public is having a hard time believing there's a payoff at the end of the process. The CNBC All-America Economic Survey finds 49% of respondents say across-the-board tariffs are a bad idea, with 45% feeling strongly about it. 35% support them, and 15% are undecided. So there is some scope for the president to gain some support. Among those most negative on tariffs are Democrats, African Americans, 18 to 34-year-olds, and those Americans living in the urban environment. Most positive include Republicans, rural dwellers, those with income above $100,000, and men 50 and older. Majorities think tariffs hurt importers, the cost of everyday goods, the overall economy, and workers. But by 51 to 37%, Americans say they'll help companies producing in the U.S. Americans have also not embraced the president's concern about our allies representing an economic threat to the U.S. Mexico, Japan, Canada, the EU, and the UK are all overwhelmingly seen by the public as more of an economic opportunity than an economic threat. Only China is seen by Americans as more of a threat, but by a modest 44 to 35% margin. It remains to be seen whether it matters if President Trump is out of step with the broad public on tariffs and trade. The president's base backs him on tariffs, believing his policy will yield results over time. But their tariff support is 20 points below his overall support. Democrats overwhelmingly disapprove of tariffs, as do independents, by a 2-to-1 margin. Steve Leisman, CNBC Business News.
Right, the U.S. president met with CEOs of three of America's largest retailers, Walmart, Target and Home Depot, to discuss the impact of tariffs on prices. Now, following the meetings, the three companies issued near identical statements, saying they welcome the opportunity to share their insights and look forward to further dialogue. I mean, that's a cop-out, isn't it? Quite frankly, from the three companies. Like, what can we say that's not going to upset anyone, that's not going to upset the president, that's not going to say anything? Well, we welcome the opportunity for further dialogue, and we welcome the opportunity to share with Mr. Trump our issue. I mean, it's a cop-out, isn't it?
Well, in some ways, have there been some early wins against the likes of competition from Temu and Shein versus some other losses, with tariffs obviously driving up the costs of some of those goods, and then the consumer who looks certainly less resilient now because they're concerned about the prospect of a recession.
So kept their jobs so far, though, Karen, by and large.
That's the big one, and economists always say that if you don't have a job, that's when it becomes very real around mortgages. But the fact is that we are seeing more uncertainty at a sector level and at a company level because of the tariffs. So there is an element there where it's hit different sides of the business. Good news some ways, bad news other ways. The question is whether international markets now open up for some of these retailers where they have not been as open in the past.
International markets?
India, we were talking about, for instance, if there happened to be a deal for the likes of Walmart and Amazon, would that get better for some of these companies?
Your model. Look at if you're talking about Walmart, look at Walmart's global expansion ideas and opportunities previously. You know, it didn't go that well with Asda in the UK, and that was one of their big marquee things. And very difficult to break into local markets with the international offering. Anyway, we will come back with plenty more on this. Plus, we'll digest the Tesla numbers, which are breaking later on this evening. That's it for Squawk. Up next, Street Science.
I'm gonna show you the way Vietnamese people enjoy coffee in the morning. I live here and I have to say that I love the traffic here, which seems like a chaos to foreigners, but it's actually an organized chaos. Everything works. Xin chào! Hello, my name is Khánh Vi. I'm a content creator and a TV host from Vietnam. Here we are at District 1, which is the central of Ho Chi Minh City. I think this is one of my favorite spots in the Independence Palace. This is the way of selfie for Gen Zs. 0.5. I'm originally from the north central province of Nghệ An, but I've stayed in Ho Chi Minh City for a couple of years now. Ho Chi Minh City has such great energy, and you can feel that when you come here. Nguyen Huệ Boulevard, and I'm so excited to bring you around our largest city in Vietnam. And here's what I do in my downtime.
I took my first journalism class in high school. It felt like a superpower. I find it really meaningful to reach new audiences, women, people of color, younger demographics. A lot of traditional financial advice might not take into consideration that people have debt or that rent is so expensive. To me, ambition means taking on new opportunities that take you out of your comfort zone but help you learn and grow.
One thing I've learned over the years is don't yell at the stock market. Why do we follow the markets? It's to make money and because it gives us a lens on how the world works. Ambition is the ability to see yourself in the future and to take steps right now in the present to become that future person. CNBC viewers are very ambitious. At CNBC, we are in the dreams business. You're watching to learn something.
Home to the world's biggest population and a fast-growing economy. Is the EV story resonating amongst Indian consumers? CNBC goes inside India to give you insights into the opportunities and challenges shaping the emerging powerhouse. Narendra Modi seeks a historic third term.
Several indicators they cannot afford to look the other way.
It's all part of the normal flow of market forces.
The stories, people and businesses behind its rise. This is your gateway to India.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, you know, injuries and worries and things that went on throughout my career, you know, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.